in the country are no longer dying, or that we hit that crest in coronavirus deaths, and that's going to make a huge difference to everything, whether we restart back, when people are, it's going to make a huge difference. But all these data that we see right now are horrible, but looking through it, that's why you have to pay attention to these metrics and buy these companies on one-off instead of just buying in the sector.
Charlie, quick final word. I know you like Zimmer Biohealth.
We're trying to find companies that are going to be fine, that are going to have pent-up demand. Zimmer is a name we love. They have replaceable hips and knees. People are clearly not doing that kind of elective surgery today. Their business is going to be down, but those surgeries are being put off, not canceled. They're going to happen. Zimmer is very well positioned long term.
All right. Charles Bobrinskoy, Jamie Cox, thank you this afternoon. We appreciate it.
Thank you.
Coming up,
Thanks for having us.
Oil executives are heading to the White House as the energy industry struggles with oversupply and cratered demand. But there's a big disagreement within the sector on the best policy approach. We will explore that. Plus, many Americans are anxiously awaiting their stimulus checks. We'll look at who's eligible and how much they'll get. And a reminder, you can always watch or listen to us live on the go on the CNBC app. We're back in 2.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique
to listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Overcoming challenges is what defines the military community. USAA has been standing with them for nearly 100 years, and we'll be here to serve you for 100 more.
Welcome back to the exchange. Crude is rebounding today by nearly 7%, but it's off its session highs. This follows its single biggest rally ever yesterday, and it's up about 26% this week. Breaking news in the past hour, Russian President Vladimir Putin says a reduction of 10 million barrels a day in global production is possible. This news comes as energy executives are at the White House. Eamon Javers has more for us. Eamon.
Yeah, Kelly, that's right. That Putin headline crossed within the past 45 minutes or so. Not clear whether he's saying, though, global production or how much of that Russia is committing to contribute to. Larry Kudlow, the National Economic Council director, was just out on the White House driveway earlier today talking to reporters about what the president thinks he heard in what Kudlow describes as multiple conversations now with Vladimir Putin and Mohammed bin Salman of Saudi Arabia. Here's what he said.
Production cuts under discussion have been President Trump talking on a number of occasions with President Putin and MBS of Saudi Arabia. And President Trump believes that they have given agreement and commitments to, ending their spat.
So Kudlow there saying that the president believes that he has a commitment from those two leaders to end their spat. Not clear how that plays into the Putin comments about a global reduction in production. All of that sets the table, Kelly, for this meeting in about an hour and a half's time at the White House with oil industry executives. Here's what I'm told is going to be on the agenda from people who are familiar with this. One of the things that the big companies are going to ask for is they don't want to see tariffs on Saudi oil. Some of the smaller players do, and so that's going to divide the industry a little bit. There's also this question of royalty and leasing relief for drilling on federal lands. There's the possibility of talking about storing excess reserves in the Strategic Petroleum Reserve. Jones Act waivers are also on the table. And Kelly, I'm also told one of the things that might be discussed here today is the idea of getting access to the Fed's new leasing program, the Fed's new lending program, I should say. That's an interesting possibility. We'll see how that all plays out at 3 o'clock.
Yeah, for sure. Eamon, thanks. Eamon Javers. Let's talk a little bit more about the state of the oil markets. Fred Kemp is president and CEO of the Atlantic Council and a CNBC contributor. Fred, welcome, because the only way to figure out where the oil price goes from here is to analyze this concord or lack thereof between the U.S., Russia, and Saudi, I guess.
Yeah, it's a fascinating situation. You have three alpha males. So President Trump, Crown Prince Mohammed bin Salman, known as MBS, and President Putin. And they all have vastly different interests in this, but they all have an interest in the price going up. And so they need a way out of this situation. And it sounds as though President Trump has put himself in the middle of this as a moderator and has navigated a way forward. The real question is, what is the U.S. giving? Because President Putin believes it's a global situation and the U.S. has to give something as well. We can't compel our companies to do things in the way that the Saudis and the Russians can. One of the things we're hearing, but first of all, there is going to be an emergency OPEC Plus meeting on Monday. Others are going to be invited to it. Unclear whether the U.S. is going to be at that meeting, virtual meeting, or not. The other thing that's been talked about, and this is really just a rumor, we haven't been able to confirm this, that there may be a shutdown in the Gulf of Mexico of production there. That's 1.8 million barrels a day. That could come close to helping get to the 10. That's U.S. production. It wouldn't be shut down as a production cut, but would be shut down for coronavirus reasons. So one would be able to skirt the issue whether or not the U.S. is joining OPEC as a de facto OPEC member making production cuts.
Right. We're actually going to be speaking with the commissioner of the Texas Railroad Commission in a couple of minutes about this very issue, Fred. So my question for you in the meantime is, when you look at the headlines coming from Putin and from the energy minister Novak this morning, they really kind of talk about how it's Saudi Arabia's fault for negatively influencing the oil market, saying it's unfortunate that they announced plans to boost oil production and that they're trying to get rid of shale producers. So is the U.S. going to be able, if Saudi's not on board with this idea, this notion that the U.S. and Russia are negotiating a cut, then is there a deal?
Well, everyone has different interests in this, but I do think they're close to a deal. The question is, how big of a difference will this deal make? The estimate for April is that some 20 million barrels a day has come off global production of 100 million barrels a day. It could be as much as 30 million barrels a day. So if you take 10 million barrels a day off the market, what difference does that really make? And they would have had to come to take market share off anyway because of they're coming up against limited storage. What's really interesting here is the lobbying of the shale producers, which seems to have shifted President Trump. President Trump early on was of the view that these lower oil prices were a tax cut. That's what he called them for the U.S. consumer. I think two things have intervened. One of them is the loss of jobs and these shale producers who are lobbying him. And by the way, they've enlisted, not as a paid lobbyist, but they enlisted as an interested party, the former energy secretary, Rick Perry, who's close to the Saudis, but also former governor of Texas. So that's some of the pressure. And then the other part of the pressure is the election. Texas is, the oil producing states of the United States are not swing states by and large, but Texas could be. And the other thing that's interesting in this three-way scrum of Putin, MBS, and Trump is the other two do have an interest in Trump being reelected. They would not do well with a President Joe Biden, or as well as they've done with the President Trump.
So final question, Fred, as these executives gather at the White House, what should we expect out of that meeting?
I think that there is some optics to this. I think the president wants to be showing he's in charge, showing that he is moderating this global crisis in the interest of these companies. There may be some talk about production cuts that aren't really production cuts. I'm really interested to hear what the Texas commissioner is going to say to you, as they have about 40% of U.S. production, and would they be interested in joining the global cuts? So I think but I do think they're going to steer away from tariffs. As your reporter said, the majors do not want tariffs. There are real differences between the majors and the independents in the room, and he's going to have to navigate those.
All right. Fred, thanks. It's good to see you.
Thank you. Great to see you, Kelly.
Fred Kemp of the Atlantic Council. Let's mention, as we head to a break here, well, first of all, we will be speaking with the Texas Railroad Commission, which has a ton of influence in terms of the oil market in Texas. 40% of U.S. production. Will they vote to curb production? We will speak to the commissioner ahead. In the meantime, millions of Americans are hoping to see a stimulus check in their bank account soon, but not everyone will be eligible. We've got the answers on who is next. As we head to break, the Dow is down more than 500 points right now, just taking a leg lower. We're just under that level, hanging on below 21,000. We'll have more in just a moment.
It's Tune In Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique
to listen to conversations breaking down the moments just like this. Click on sports to be part of the discussion on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Your grandfather's office chair. X-Chair supports workers everywhere who find themselves now working from home. Call or click to get $100 off the amazing X-Chair, featuring dynamic variable lumbar support. Plus, for a limited time, you can also add X-Wheel blade casters as a free upgrade and free same-day shipping. Just use code WORKFROMHOME. Create the world's most comfortable home office with X-Chair. Call or click to order today and receive a 30-day risk-free trial and $100 off.
Let's do this. I want to be a rock star so bad.
Shark Tank We Heart Music Marathon, Monday, 8 Eastern, CNBC. Get yours and catch Trolls World Tour in theaters and at home on demand April 10th.
Welcome back. Let's get a check on the markets right now. All the major averages lower after that rough jobs report this morning. We've continued to move to session lows as the day continues. A drop of 518 for the Dow was a 2.4% decline. Very similar declines for the S&P and the NASDAQ, and all 11 sectors of the S&P are again lower. That includes utilities, financials, communications, services. Utilities, the biggest laggard, down 4% today. Over in the Dow, Boeing and Pfizer are your leaders. IBM, Caterpillar, and American Express are the laggards. CAT down 3%, as mentioned, still about 7% on the week. And it's another weekday for airlines with red across that entire sector. American, United, and Southwest all with big declines, and casino stocks having a rough day too. Wynn and MGM seeing losses of roughly 10%, increasing to about 12% now. And a look at shares of FedEx are also falling. The company pulled its guidance today and warned about taking government assistance. The shares are down nearly 7%. There are a few positives, though. Tesla is higher on those delivery numbers. Etsy is in the green after it posted strong sales. There's Tesla hanging on to a gain of about 3% right now. Let's get the latest coronavirus headlines at this hour. Over to Wilfred Frost for that. Hi, Wilf.
Hi, Kelly. So good afternoon to you and everyone. Wisconsin still plans on holding its primary next Tuesday, but a federal judge says the results must be withheld for another week until extended absentee balloting is complete on April 13th. Wisconsin is the only state that is holding its primary this month despite the pandemic. The spread of the coronavirus in Italy appears to be stabilizing with just under 4,600 new cases since yesterday. That's down slightly from the previous day and well below the record 6,500 on March 21st. Prince Charles officially opening a temporary hospital in London's Excel Centre. He did that remotely following his self-isolation after contracting the coronavirus. And Queen Elizabeth also announcing she will deliver a rare TV address on the virus this Sunday. It's only the 5th such address she's made during her reign. As always, for more on the coronavirus, head to cnbc.com. Kelly?
All right, Will, thanks. We'll see you soon. Treasury Secretary Steven Mnuchin says coronavirus stimulus checks could go out as early as Monday. But who actually qualifies and how much do they qualify for? Sharon Epperson has those answers for us. Sharon.
Hey, Kelly, we've gotten hundreds of questions about this, and here's what you need to know. The IRS is going to use your 2018 or 2019 tax return to determine if you qualify for a stimulus payment, what they're calling an economic income payment. And if you're single, you'll be eligible to receive the full $1,200 payment if your adjusted gross income is less than $75,000. Now, if you made between $75,000 and $99,000, you're going to get a reduced payment. And if your income was over $99,000, you're not going to be eligible to get a check. Now, if you're a married couple, you file jointly, you'll get a $2,400 check. That is as long as your adjusted gross income was less than $150,000. If it's between $150,000 and $198,000, you'll get a reduced amount. And if you're over $198,000, then again, you don't qualify. For parents who have a qualifying child, and that means your child is under the age of 17, then you'll get a $500 payment for each child. And another important point to note here, this is not going to be taxable income. These payments are seen as an advanced refund on the taxes you're going to owe in 2020. And if it turns out that actually you're not due a tax refund next year, you still don't have to pay this money back. This is your money to keep.
Advanced refund. Okay, that's super interesting. How long will it take to get a check, Sharon, if you're not getting the direct deposit? And is nobody going to have to pay this money back no matter what?
Well, you're not going to have to pay the money back as long as what we've been told and what we've seen in legislation and talking to tax policy experts, as long as you qualify for it. In terms of getting that check, direct deposit is key. And so if you did that on your 2018 or 2019 return, that's great. If you did not, and you usually get a paper check if you get a refund or you've turned it in by paper, you will get it in the mail, but it could take a long time. According to what we're hearing right now, those checks may not start to go out until the first week in May, whereas if you have direct deposit, the Treasury Secretary says the week of April 13th is likely when those checks will start to go into the direct deposit into bank accounts.
All right. Well, Sharon, I don't think you guys are going to run out of reading material during this time. Yeah.
Not at all.
Looks like you're at the local library. We're coming to borrow a book from you, but that's not allowed.
That's what happens when you have an author for a husband. You know, when you have a prolific author in the house, that's what happens.
Sharon, it's good to see you. We appreciate it. For more from Sharon about the CARES Act and what you might qualify for, go to cnbc.com/investinYou. And in just over an hour, the CEOs of some of the biggest oil companies will be at the White House speaking with the president. Up next, we'll talk to one of the most influential men in Texas when it comes to oil. And he's a regulator in charge of a commission I bet 99% of the country hadn't heard of till yesterday. The Texas Railroad Commissioner, Ryan Sitton, will join us. The exchange will be right back. As we go, here's a look at the week's top S&P performers. 4 energy names leading the pack on this sharp bounce back in oil, including Noble and Halliburton. We're back in 2.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right? Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raised Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
The smartest trades.
You see John and Pete Najarian on TV. Whether you trade stocks or options, this is how they pick their trades. And you don't have to be here to get your free copy. Call or go to followthesmartmoney.com right now. Just take care of delivery and it's yours free. Act quickly and you'll also get this companion DVD for free.
Call 800-850-3232 or go to followthesmartmoney.com now. That's 800-850-3232 or followthesmartmoney.com. That's followthesmartmoney.com.
Welcome back to The Exchange. Let's get to some of the big calls of the day. Goldman Sachs is upgrading Twitter to a buy with a $35 price target, up from just under $23 today. The firm says the recent sell-off has created an attractive entry point because new and returning users will see the value of the platform during these localized crises times. It could create future users that Twitter will be able to better monetize, they say. Meanwhile, B. Riley FBR is upgrading Lululemon to a buy with a $210 price target. Lulu today is trading down 2.5%. to 180. The firm believes that Lulu will benefit as consumers continue to exercise at home. The retailer is offering free online workout classes that could increase loyalty and attract new customers. And Lulu should benefit, they say, from an increase in casual wear as consumers work from home and seek comfort. And finally, Rosenblatt initiating Peloton with a buy at a $42 price target. That's nearly 50% upside. They say Peloton is also positioned with an attractive business model that has economies of scale and an early mover advantage, and that they should be a beneficiary from COVID-19 in the short term with gyms closed. Peloton has been holding up relatively well, and they're up just under 6% today. And we're just over an hour away from the president's roundtable meeting with executives from at least 7 energy companies. This as the price of oil is coming off its best day ever, up 8% again today, and on pace for its best week since 1986. But again, we're down more than 50% for the year. My next guest says some producers in the Permian Basin are getting offers at $6 a barrel, and he predicts that could take the oil market up to 2 years to recover from the damage done by this outbreak. For more, I'm joined by Texas Railroad Commissioner Ryan Sitton, one of 3 officials tasked with regulating oil and gas. And Ryan, it's great to have you here. Welcome.
Thank you for having me.
The question on everybody's mind is, would Texas agree to cut production?
If the president negotiates an international deal, which it seems like is in the works, and in fact, I'm sure you saw I got a call from the Russian oil minister yesterday, and if us cutting would promote that or help get that deal done, then yes, I think that Texas would be supportive of that.
Look like, do you guys have, there's 3 commissioners as I understand it. Do you all have to agree to a vote on that? Does it mean quotas? Can it, how formal of a decision would something like this be?
It would be a formal decision, be a vote, and it would take 2 of the 3 of us to vote for it. The mechanism to do this has actually been in place in the state of Texas for nearly 100 years. Back from the 1920s to the 1970s, Texas prorated its production and was actually the primary driver of global oil prices for those 5 decades. So we have a long case history. We have the mechanisms to do this. The question is, does it help get an international deal done? If so, we've got the mechanisms to do it.
Well, some of the critics of this move say quotas in particular could help the weaker players in the oil patch and hurt the stronger ones. What is your response to that?
Well, right now, people talk about this being a market situation. The fact is, I don't know who's doing well in the oil business right now. And when you have demand destruction of 20 to 25 million barrels, this is not a normal market condition. I mean, if you believe this is a normal market, then apparently we have a 90% oversupply of restaurants in the United States. The fact is, we're not talking about normal market forces, so it's not going to take a normal market response. Us looking at how to simply stabilize the oil business through this crisis so that those jobs remain and we can produce more oil in the future when demand comes back, that's got to be our top priority.
People are also wondering if you could come up with an unconventional way of cutting or capping production. One of the things I've seen is requiring companies to kind of agree to the natural gas permitting that I know are not that greatly enforced right now. So in order to avoid nat gas flares, having to do something like that could effectively shut production. The other thing I've seen is maybe stopping offshore drilling. I mean, are there different levers that you can pull here?
There are different ways we could prorate. In the end, the Railroad Commission actually has a specific charge in Texas law, which is to prevent waste. And one of the criteria for preventing waste is looking at market demand. So if we want to follow our Texas constitutional prescribed powers, then we need to look at simply what the market is. Now, yes, we could say we're going to limit flaring, but just like earlier, some people have said, wait a minute, you may be disproportionately impacting stronger or weaker performers if we use flaring as the tool that's using a particular policy concern to affect an outcome that we may not want. So I would be hesitant to jump off into that and not simply stay focused on what is the market demand and how do we share in that market reduction equally during this specific coronavirus downturn.
Would you be comfortable with $42 oil? That's what Vladimir Putin earlier today said he would be satisfied with.
I'll tell you this. I actually think, to be very blunt, that's high for now. I am not doing this to try to get the price of oil up. What I'm trying to do is keep it from crashing into the single digits. If you get into the 20s, even $30 a barrel, there are levels at which I believe that the U.S. producer can sustain, can operate, won't be comfortable, still have really cheap prices at the pump, but it will keep the massive amount of bankruptcies from going on if storage fills up. At that point, there's just nowhere to put the oil, which is the track we're on right now.
Ryan, is Texas joining OPEC?
No. That will not be the case. This will be part of a singular deal. If we're following the president's lead on this, if he decides that we need to do something, as I said, got the call from Russia yesterday. If this is part of that international agreement, in light of the fact that we're in arguably the worst economic pandemic in mankind's history, then yeah, we will participate in extraordinary measures due to those extraordinary circumstances. I don't see us having a long-term role with OPEC at all.
All right. Ryan, thanks for your time today and for joining us. We appreciate it.
Thank you for having me.
Ryan Sitton of the Texas Railroad Commission. Learning a lot lately. Coming up, it's been another volatile week for these markets. We've had moves of more than 900 points to the downside and more than 600 to the upside. We're going to look at what's on tap for next week. Our breaking news coverage of these markets does continue right after this. The Dow's down 4.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
She's paying this much just by using GoodRx. Use GoodRx to compare prices at pharmacies in your area and stop paying too much for your prescriptions. Download the free app today and take back control.
I finally got to start my career, except that I was spending thousands of dollars on interest on my student loans and I needed to refinance. And then I found Credible.com. Within just a few minutes, I had actual rates from lots of lenders. Now I'm saving thousands of dollars, and I'll be out of debt much sooner. And I can focus on my future. It was so easy, I wish I had done it years ago.
Visit Credible.com to see how much you could save on your student loans.
Welcome back. Another volatile day for stocks. The Dow's down just under 500 points right now, and we're on pace to close out the third negative week out of the past 4. My next guest says this volatility is far from over. Kevin Mon is here. He's president and chief investment officer of Henyon & Walsh Asset Management. Kevin, welcome. So how do you ride out these times?
I think what the main focus for investors is right now is a focus on quality. Certainly, we received a tremendous amount of response from the federal and our federal government. But, Kelly, that's not going to be enough to stave off recession. It can limit the but it's not going to prevent it. So how do investors position their portfolios to take advantage of a recessionary period? We think the focus is on quality, both equities and in terms of fixed income.
Kevin, just you're breaking up a little bit, so I'm going to have you repeat the last piece of that. It sounded like you said you're looking for good quality equities and fixed income. Could you give some examples?
Companies that have strong balance sheets, low debt to asset ratios, and have a high Altman Z-score. Many may be familiar with an Altman Z-score. That actually shows the likelihood of a company declaring bankruptcy over the next 2 years. Our Altman Z-scores have a lower problem of declaring bankruptcy, so that's certainly an area that investors should focus on.
Apologies. Again, the audio quality, for the most part, we're doing pretty good here these days, but we'll get you back when we can just clear that up a little bit, if that's all right. Kevin Mon joining us from Henyon & Walsh Asset Management. Stick around. I'm going to join Tyler for Power Lunch after this quick break. We're going to talk about jobs and the human toll this unprecedented economic shock is having on millions across America. Former New Orleans Mayor Mark Morial will join us. Plus, we'll get the pulse on commercial real estate, a big sector of the moment. Retailers, restaurants, and all sorts of small businesses have shuttered their doors during the coronavirus crisis. We'll have more on the fallout for that sector when we come right back.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls.
Solution able to provide your remote leadership with a view of all the critical data and content surrounding your business in a secure hybrid cloud environment. Bluescape. Together from anywhere.
Restaurants are facing a crisis, and they're counting on your takeout and delivery orders to make it through. Grubhub. Together, we can help save the restaurants we love.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I was skeptical. So I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800. Coventry Direct, redefining insurance.
Extraordinary times, unprecedented coverage.
We are far from normal here for this market.
CNBC's Closing Bell. Breaking news, crucial moves in the final hour of trading. Today, 3 Eastern. Watch or listen live on the CNBC app.
Good
Good afternoon, everyone, and welcome to our continuing breaking news coverage on Power Lunch. I'm Tyler Matheson. Stocks, as you see right there, are near session lows right now as the market gets set to wrap up another week amid this global turmoil. Major averages now on track for their third down week out of the last four. I would have thought it was 4 out of 4, but whatever. Third out of 4. That's as the U.S. reports a stunning 700,000 person plunge in payrolls this month. It is a first decline in payrolls in a decade. And to provide some relief, the government is launching its small business loan program today. We will talk to the CEO of a small business lender about what he is seeing on the ground and some of the red tape and tangles that he's having to deal with. Meanwhile, cases of coronavirus are increasing at a very rapid pace. There are now more than 1 million confirmed cases around the world, with about a quarter of those, Kelly, right here in the United States.
Before I move on, what happened to the fireplace?
It's behind me. We'll have to adjust it. We have a different shot today, but we'll get the fireplace in the shot.
I think you've got a lot up your sleeve. All right, Tyler, thanks. We've got every angle covered of this story for you today as we close out the week. Bob Bassani will look back at what a wild week it's been. Steve Leisman has more on the shocking payrolls number that Ty just referred to. Bob, let's start with you.
And Tyler, I love that vest of yours. You look very classy in it. I'm a little jealous about it. It's banks, it's utilities, it's REITs and retail. That's what you want to focus on this week, because those are the industries most affected by people who may not be able to pay their mortgage or be impacted by that, and with no consumers buying things, particularly for the retailers. Banks, I think, are the most important thing this week. Just ridiculous declines this week. Fifth Third down 23. This is 1 week. Some of these companies have been cut down 40% in the last month. Regions Financial down only 18%. If you look at the retailers, just a catastrophic week. This is a week. Chico's down 43%. Dillard's down 38%. Kohl's, Gap down 28%. These stocks have been cut 50% or more just in the last couple of weeks. Utilities, another sector. And again, we just look at plain old run-of-the-mill electric power companies, regulated electric power companies like American Electric and Edison, all down double digits as well, and concerns of whether people could pay their electric bills as well. Believe it or not, I know you'll think I'm crazy. This is a calmer week than it has been in the prior 3 or 4 weeks. The volume is about 30% lower than prior weeks. The intraday swings are about 2 to 4% from the high to the low on the S&P. A few weeks ago, we were 5, 6, 7%. And the VIX, believe it or not, is below 50. We were 80 3 weeks ago. So, guys, I take no solace in saying we're down 2.4% on the week. But in terms of all of the craziness we saw 2 and 3 weeks ago, this is calmer. And heavens, a month ago, I would have thought myself crazy to say that, but it is true. Guys, back to you.
And I think you should try out the vest, Bob. Thanks. Let's get over to Steve Leisman now, who is digging into this devastating payroll plunge as tons of Americans are now left without work during this pandemic. Steve.
You know, Kelly, I got to advise you and Tyler to save your adjectives. Shocking, devastating, stunning are all true. But by every account, there is much worse to come in the future. This jobs report showing a decline of 701,000, only picking up the first part of March, or really the second week of March, before the majority of the layoffs that we know of have happened. There's been 10 million people in the second part of the month who filed for unemployment claims. Still, inside the report is some data that's probably going to tell us how this thing is going to go, at least near term. I want to go right to looking at by sector. Leisure and hospitality down by 459,000. Healthcare, social assistance down by 61,000. That healthcare are doctors and dentists' office. Social assistance is childcare closing down. Professional business services, inside that, employment offices, temporary help. Retail, just a leading edge of what we're about to see, and construction also taking a hit. Now take a look at some of these declines in the smaller subsectors here as a percentage basis of the total employment in that sector. Sightseeing, transportation, losing almost 4% of total employment. Restaurants and bars, almost 3.5%, and on down 1.8% for childcare. The clothing business, 1.3% of total employment. Looking inside the other survey, the household survey, some more details emerge. There are 1.5 million additional people working part-time because they couldn't find full-time work. An additional 1 million people on temporary layoffs. 252,000 not at work because of illness. That's a very high number for this time of year even. And we've lost 250,000 self-employed. There's also some mischaracterization. The survey responses, guys, were very bad. The people who do these surveys often go out, knock on doors, and can't necessarily didn't this time around do some of that. Most of it was by phone. So this is the leading edge of what's about to happen. It's going to get worse, and all you can do is think about the other side of this, Kelly and Tyler.
Yeah, and on that note, Steve, thank you. We've got some breaking news out of Bank of America on their small business lending program. Wilfred Frost here. What can you tell us, Wilf?
Yeah, so Kelly, I've got some numbers. Just got off the phone with Bank of America. Of course, they were the first of the biggest banks to open their process to apply for a Paycheck Protection Program loan. As of about 10 minutes ago, they've had over 60,000 applications, totaling over $6 billion worth of requests. Some astonishing numbers there. And bear in mind, they've got over 1 million small business customers. So if it continues at this rate and most of their clients apply, the numbers are just going to be even bigger. 60,000 so far, $6 billion of requests so far. They are also adjusting their policy to now address all small business clients that they have with a checking account. They don't now need to have had a previous lending relationship with the bank. You and Kayla discussing last hour how that had attracted a bit of heat from people like Senator Marco Rubio, and it's kind of a lose-lose situation in them. They were trying to do that in order to speed up the process for those clients that they had the most details on. Either way, they've adjusted the policy as things stand. And of course, those numbers also highlight that they have been open to 60,000 customers in a way that perhaps some of the other banks who hadn't opened yet were. But some pretty astonishing numbers. And as we said throughout this, it is a first-come, first-served basis, which worries some small businesses. But Secretary Mnuchin has said throughout, and Speaker Pelosi this morning also said throughout, that if it goes past that total $350 billion, they would be open to extending that amount. Cal?
Wilf, thank you. Ty?
You know, Wilf, if you take this number and you take it and extrapolate it across all of the banks, this is one bank, Bank of America, 60,000 today alone. Take that across the major banks. Then take that to the TD banks and the local banks that are doing this. You just wonder whether the computer infrastructure is going to be able to handle it, or is it going to be reminiscent, remember, of the initial response to Obamacare back a half dozen or so years ago?
Well, listen, of course, Tyler, the numbers are just unbelievable. And throughout the last couple of days, there's been criticisms and complaints flying around. Who's going to be ready by midnight? Who isn't going to be ready? And clearly, for any small business that thought today they would be getting the money and hasn't got it yet, the pain must be indescribable. The flip side, if we get to the middle of next week, the end of next week, and everything is up and running smoothly, I think you'd have to say, well, this is a program of this scale that typically would have taken many, many months to get ready. And if all the banks get it going within the space of, say, 2 weeks as opposed to 1 week initially, then perhaps that's something that would have to be applauded at that point. At the moment, we're still sort of stuck in the middle. But these numbers from Bank of America processing 60,000 applications shows the scale on these banks' hands. And no doubt Bank of America is going to have more ability to respond to that number than some of the smaller banks might.
All right, Wilfred, thank you very much. Let's give you a quick market check. And as you see, the Dow Industrials are moving a little bit off those lows of the day. When we began the hour, they were down about 500 points, now down just a little bit less than that. As you'll see in just a moment, I've got a little bit of a delay on my what we call return here in my home studio. But again, the market's on pace for yet another down week and a rocky one. Let's turn back to our coverage. Our next guest says that the relief measures taken so far are not nearly enough to help blunt the effect of coronavirus on the economy, and that businesses are facing, quote, an acute cash vacuum. For more, let's welcome in Joe Davis. He's the chief global economist and head of investment strategy at Vanguard, and our friend Ron Insana, CNBC senior analyst and senior advisor to Schroders. Mr. Davis, you say, among other things, that there's an acute cash vacuum that is swiftly going to crash upon us. But you also say that the GDP, the gross domestic product in the United States, is likely to have a downward spiral that we haven't seen since the 1930s. My question to you, sir, is if that happens, is the stock market ready for it? Has it discounted that possibility?
Well, thanks for having me, Tyler. And that's tough to answer. I mean, I think there may be volatility ahead. I mean, the market is increasingly, pricing in a pretty somber outlook. That this will have a finite end to it. So, but the drop is pernicious. It's eye-watering, even when you look further back in history. So,
some of the policy responses we've seen have been helpful, the Federal Reserve and the CARES Act, but I think it's insufficient just given the headwinds we're currently facing.
Ron Insana, you can't really imagine what it would be like if we didn't have these maneuvers from the Treasury and Congress and from the Federal Reserve. But do you think that they're going to be enough to stabilize things? I mean, the amount of damage that is being done by the minute in the economy is really incalculable.
Yeah, it is in many ways, Tyler. I would agree. And when you look back across history, we've never seen an automatic shutdown of the economy like this. Even if you go back to the Depression, there was a buildup to the weakening of economic growth. The Depression occurred over a period of 3 years and reached its nadir in 1932 when the unemployment rate hit 25%. Here, we're likely to hit 15 or 20% in a matter of weeks, if not months, which is, again, something we've not seen. Now, having said that, the relief programs so far, and I've been reviewing some of them because I am a small businessman myself, seem to be quite reasonable, although I do expect they'll have to be extended. It's hard to imagine that they're going to be able to fill a multi-trillion-dollar hole in the economy in excess of the $2.2 trillion relief package that's been passed. And then there's also presumably another $4.5 trillion in lending facilities from the Federal Reserve still to come online. But one would assume that this is going to get extended for small businesses, the type of relief we've discussed. Unemployment insurance will be extended, and that hopefully will help mitigate some of this. But it will take a Herculean effort to really blunt the impact of what we know we're going to see.
Joe Davis, are you in the camp that believes that the return to something like normal is going to be swift, or are you in the camp that believes that maybe we're in for not just a quarter or 2 quarters, but maybe a much longer time where we bump along the bottom economically?
Yeah, Tyler, I'm not in the L camp, although I wish I had more confidence in it. I mean, to be honest, I think we will see, hoping the day will come when the virus really dissipates and, we can lift some of these containment measures. When that does, I think arithmetically we'll get a modest growth rate bounce. But I think we're at a vulnerable stage here. The next several weeks and months are critical because there's building solvency and credit issues. The economy ultimately needs cash, not credit. And so I think, as Ron said, I think that the assistance to small businesses is just going to need to be supersized. By my estimates, at least 10 million businesses may need some sort of support or assistance. So it's going to be a Herculean effort. I think what occurs and transpires over the next 2 months, I think, will dictate the pace of the recovery.
I want to ask you both a final question, if I might. I'll start with you, Ron. As we've been talking over these past couple of months, people have been saying, well, at least this is not a financial crisis like 2007 to 2009. But what, Ron, is the possibility that this morphs into a financial crisis beyond this crisis of demand destruction?
Yeah, I think, Tyler, that might be somewhat optimistic on the parts of those who are suggesting this isn't yet a financial crisis. I mean, it's a biologic crisis, it is an economic crisis, and it has to a certain extent morphed into a financial crisis of sorts. Clearly, the banks are far better capitalized, and they are not the source of the problem as they were in 2008 and 9. However, having said that, when you see the number of levered loans, when you see the high yield market, which granted spreads have tightened of late, when you see the dislocation going on in credit, there are going to be some problems there that mirror a financial crisis, maybe not to the same extent that we saw in 2008 or 9, but it's going to ripple through the system.
Joe, I'll give you the last quick word on that question about whether this could morph into a financial crisis or may already be one.
Well, I think we're on the precipice of credit issues accelerating. I wouldn't say that it's a foregone conclusion, only because of in the next few weeks, the sort of response we may see from fiscal as well as monetary policymakers. We're in a critical juncture. I'd like to not completely close the door and say a crisis is a foregone conclusion, but the next several weeks and months are an important point.
Joe Davis of Vanguard, thanks very much. Ron Insana, always great to see you. Gentlemen, stay safe. Have a good weekend.
You too, Tom.
All right, the White House is set to meet with oil executives this afternoon as crude prices have fallen 43% in the past month. It was worse a couple of days ago, but as you know, there's been a bit of a bounce back. Eamon Javers is covering the meeting and everything else from the White House today. Hi, Eamon.
Yeah, hi, Tyler. We're expecting that meeting in about 45 minutes' time now, and what we're told is the oil executives will meet with the president directly, and Larry Kudlow, the National Economic Council director, to set up the meeting, was talking to reporters earlier today. He was asked if the United States might consider cutting back its own oil production out of the Gulf of Mexico as part of a broader global cutback of production. Here's what Larry Kudlow had to say earlier today.
Production cuts under discussion have been President Trump talking on a number of occasions with President Putin and MBS of Saudi Arabia. And President Trump believes that they have given agreement and commitments to, ending their spat.
So Larry Kudlow there saying that the production cuts the White House is envisioning are over in Russia and Saudi Arabia, and saying that the president believes he has a commitment. I think the emphasis there is on the word believes, because the Russians have been a little bit more skeptical about the idea of a commitment. Vladimir Putin came out earlier this afternoon and suggested that he could see a 10 million barrel production cut around the world globally, but it's not clear how much from his comments he envisions Russia doing as part of that cut, and whether that involves the United States cutting as well. All of that will be on the table here for this oil executive meeting. One of the big issues, I'm told, Tyler, they're going to be talking about is this idea of tariffs on Saudi oil. That's something that a lot of people in the oil industry believe the president is interested in doing, but a lot of people in the oil industry, some of the big producers, don't like that idea. Some of the little guys do like it, and so we'll see where it all lands at 3 p.m.
Eamon, we appreciate it. Thanks. Great reporting as always. That's our Eamon Javers. Coming up, we're going to have more on oil, the market turmoil, the S&P about to end another volatile week, down about 3%. It's utilities, energy, and financials leading the declines once again today. There you can see them. Utes are down about 4%. Plus, many companies are laying off employees despite the federal government's efforts to provide relief for businesses. And some are doing it in an unusual way. We'll dig into that story next.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
New York City's a travesty. The mayor waited way too long to impose the lockdown. Now we're all paying for it. So I think a nationwide shelter-in-place order would make a huge difference in the course of this pandemic. Watch or listen live on the CNBC app.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
I sent your new prescription to the pharmacy. Any idea how much it will cost? You have a choice. Insurance or GoodRx? I have insurance. Insurance is not what it used to be. People struggle to get their prescriptions covered, and prices keep rising. I recommend GoodRx. You get free coupons to save on your prescriptions. Compare prices to find the best discounts.
GoodRx. Smart.
Stop paying too much for your prescriptions. Download the free app today.
From kitchens broken in by new chefs to bathrooms sinking battleships, Terminix is committed to keeping pests out, always backed by the Terminix promise to protect your home for all the love it holds.
Welcome back. The number of Americans losing their jobs is skyrocketing as more and more companies are laying off employees in a new way amid the coronavirus outbreak. Rahel Solomon has more on that for us. Rahel?
Hi, Kelly. So this is a conversation that perhaps we never expected to have, but in this age of social distancing, a lot of companies, or at least some companies, big and small, are turning to video conferencing software programs like Zoom to virtually lay off some of their workers. ClassPass confirmed that they had to lay off some of their workers via Zoom. Beauty retailer Sephora announcing that earlier this week they did in fact lay off about 3,700 seasonal and part-time workers. So for Sephora's part, they say that they have employees all over the country. And so though it was a tough decision, they felt like conducting these layoffs in this method was the best way to do it. Some, however, have called it callous. We spoke to one worker from Sephora. Her name is Lydia Williams. She says that she was a part of those virtual layoffs this week. She tells us that there were more than 100 people on that same call. Take a listen.
It's just the fact that it happened and it came so suddenly after we had already been told that we would be taken care of, that we would still be on payroll, that we would still have jobs.
Now, Sephora did offer those workers severance, but it's currently facing some backlash online with the hashtag boycott Sephora on Twitter, as some say, again, the way that this happened was callous and urging people to stop shopping there. Guys, I'll send it back to you.
All right, Rahel, I'll pick it up from there. Thank you very much, Rahel Solomon. Well, with more and more people out of work, what could the next few months look like in this country? Let's get some perspective now from an individual who follows it very closely. Mark Morial is the former mayor of New Orleans. He is now the president and CEO of the National Urban League. Mayor Morial, it is great to see you. Obviously, this illness so far has been centered in large urban areas, which is really your constituency, whether it's New York City or Detroit or the town you know so well, New Orleans. What are you feeling out of those communities?
I'm sensing that there's a great deal of anxiety, a great deal of fear. In my own hometown of New Orleans, we just lost the legendary jazz musician Ellis Marsalis and a number of other people who were prominent in the community, high school football coaches and others. So it's beginning to touch very close to home. If you're in a situation where you know someone who's been ill or you know someone who's now died because of COVID-19, this becomes something very different. We can all watch the numbers, but in many of these communities, they're tight-knit. People are very close to each other, and people know people who have lost their lives. I just noted a transit operator in Detroit just lost his life due to the virus. So it's beginning to hit close to home. And so you've got a public health emergency that's initiated an economic emergency. And that's what makes it. And then the third thing is the level of uncertainty. We don't know when physical distancing will end. We don't know when broad testing or a vaccine will be available. So we're looking into the future, and there's a great deal of uncertainty all across the land, but certainly in urban communities, particularly where the virus numbers have been high. But I warn people, don't say because it's high there, it can't get to me. It can't come to me because of the spread of this disease. It's now in every single state and territory in the United States. To a different degree, but we don't know what the future holds.
The spread and the speed of transmission of this disease is something that is really just something we've never seen, at least in my lifetime. I was speaking to a physician maybe 6 weeks ago, and he said very presciently, everyone in this country is going to know someone who gets sick. And most people in this country are going to know someone who passes away from this. I want to turn the conversation in a different way. I know you're a spiritual man. What is this doing to our soul?
It's challenging our soul because it's forcing us to be patient, perseverant, and I think I have faith. But it's also challenging the sense of optimism. It's easy for there to be a great deal of doom and gloom because of the uncertainty and the fact that this is global in nature. It's not in one community. Most emergencies may affect a community. A natural disaster may affect a region of the country. Even a global economic downturn like we experienced 10 years ago, it did not have the effect that this is beginning to have on all of us. So it tests our faith, but it tests our perseverance and our confidence in ourselves as human beings. And we've got to, I think, have faith and pray for healthcare workers and those on the front line. We've got to pray for the elected and public officials who are working, I think, for the most part, in a diligent way to help to lead the best and most responsible responses to this.
I was going to ask you where you turn for spiritual help right now, and you answered it. Let me then angle another question a different way. People's sense of self-worth is tied up very intimately in their work and what they do. It gives them a sense of worth, a sense of contribution. And when you see 700,000 people now having lost their job in the last month, 6 million people just yesterday filing unemployment claims, what is it going to do to people's self-worth? And how do you think, how lasting do you think that damage could be?
Well, it's so stunning, Ty, the actual numbers that we see, and phone calls I've fielded have been from small business owners that have 50, 75 employees to people who were self-employed. And for a minute, they get their bearings, and then they begin to wonder, how will I make it a month from now or 2 months from now? Are these government programs going to be temporary, or will they help me transition to when the economy is indeed better? The uncertainty and the anxiety that I think is beginning to affect people and families, children not being in school, not knowing when they'll be able to resume their studies. Will they have to repeat a semester or repeat a grade? All of these are considerations and factors that are affecting, I think, the average American families and people at every level of the economic ladder. Those certainly at the bottom, the working people who work from paycheck, live from paycheck to paycheck, are going to have the most amount of stress. I think there's going to be a need for COVID, not only 4, but maybe 5. And I want and encourage the elected leadership of this country to move very quickly to do whatever is necessary to bridge people over to what I think is going to be a better time. We need that vaccine. I think the uncertainty around this is going to continue until there's a vaccine that protects all of us. And that's what I'm hoping for. That's what I'm praying for. Until we get that, there's going to be the uncertainty as to whether this virus will subside. It will reaccelerate once the weather gets cooler in the summer. We just don't know. But I want and hope people have faith and realize that we are all in this as people together. This is not affecting one or the other. This is affecting everyone in this country. And so we've got to look at each other and recognize we're all in the same boat. Now, economically, some people are going to have much more stress.
Mayor, we're going to have to, I'm sorry to interrupt, we're going to have to leave it there. And thanks for the conversation. I look forward to the day that we can talk about the Saints and LSU football again. Mayor Morial, great to see you.
Thank you, Ty. Appreciate it. Thank you.
All right, let's get over to Wilfred Frost for the latest on the coronavirus. Wilf?
Hey, Ty, good afternoon to everyone. The head of the International Monetary Fund says the pandemic is humanity's darkest hour and a big threat to the whole world. The World Health
crisis like no other. We have witnessed the world economy coming to a standstill. We are now in recession. It is way worse than the global financial crisis.
The World Health Organization says airborne transmission of the coronavirus is contributing to the spread of the pandemic. The main driver, however, is still symptomatic people contaminating surfaces and other people by coughing and sneezing. Part of Chicago's largest convention center is getting turned into a temporary hospital. Eventually, McCormick Place will be able to handle 3,000 virus patients with less severe cases not requiring intensive care. Illinois governor and Chicago's mayor are set to tour the facility this afternoon. As always, for more coronavirus coverage, head to CNBC.com. Kelly, back to you.
Well, thanks very much, Wilfred Frost. Drug shortages were a problem in the U.S. before the coronavirus pandemic, but the outbreak is putting even more pressure on the healthcare system. Let's go to Meg Terrell for those details now. Meg.
Hi, Kelly. Well, experts say there are really three reasons that are contributing to the exacerbation of the already huge problem of drug shortages in the United States. One is that there are more patients being put on ventilators, so drugs used to support that are starting to spike in terms of demand. Medicines used to treat COVID-19 also seeing huge spikes in demand. And finally, acute care drugs that are supplied from China and India are at risk of shortage as well. Now, in terms of those ventilator drugs, looking at demand spikes in March from data from Vizient, which is a group purchasing organization representing a huge number of hospitals in the U.S. They see sedatives and anesthetics demand going up more than 50% in March. Only 63% of those prescriptions can now be filled, according to this data, which you can see here. Pain medicines also seeing a major spike in demand and only 73% being filled, things like fentanyl and morphine. And finally, neuromuscular blockers, which are used for that as well, also seeing issues. Now, drugs to treat COVID-19, this is according to another company called Premier. The antibiotic azithromycin, which can treat secondary infections and is being tested as a treatment with hydroxychloroquine to treat COVID-19, seeing a demand spike of 170%. Chloroquine, which has been a lot in the news, the anti-malarial, demand spiked 3,000%. And finally, albuterol, which is a breathing treatment, also seeing demand spike and supply issues. Finally, we want to draw your attention to just the issues of our supply chain coming from China and India. Some of the production may be getting shut down, according to a study from University of Minnesota, and also some of those drugs might be blocked from leaving the country. They chart 156 critical drugs that may be at risk of shortage within 90 days. And this involves things like antibiotics, epinephrine, and albuterol again. So it all adds up, Kelly, to a very concerning picture. I talked with one of those University of Minnesota researchers who said he's getting more and more concerned every day. Back over to you.
But Meg, would you say that in general the shortages are in treatments directly related to coronavirus, or because we heard so much about the Chinese supply chain of everyday medicines before, is this stuff that more common medicines at this point?
It's both. There's an issue with the reliance on China and India for the supply chain, but also you see it really directly in these medicines that are being used because of the coronavirus. So people who use these medicines for other diseases are having trouble getting them as well. So it's just a downstream effect that's playing out across the system. I'm sorry you're hearing my dog bark at the mailman there, working from home.
We just request a visual, Meg, at some point. Meg Terrell, thank you very much.
I think the dog was saying he agreed with everything you just said, Meg. Thanks again. All right, still ahead, companies are closing their doors and furloughing workers. It's unlikely that they will be able to pay their landlords, so we will look at the potential fallout in the commercial real estate world coming up. But first, the government's small business loan program has begun, but not without a few hiccups, to put it mildly. What business owners are saying about the process. And please remember that you can always watch or listen to CNBC live on the app, CNBC app. We'll be right back with our breaking news coverage of this market.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today. Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Life isn't a straight line, and sometimes you can find yourself heading in a new direction. But when you're with Fidelity, A partner who makes sure every step is clear. There's nothing to stop you from moving forward.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Here's important information for anyone with an annuity or structured settlement. It's your right to sell all or part of your annuity payments for the cash you need now. Whether you need to make an important purchase, pay off debt, or build a business, call the pros at Peachtree today. We can help you get the cash you need. We're professionals at buying structured settlements.
Hi, I'm Maggie from Peachtree. We've been helping people for over 20 years. We can help you turn your settlement or annuity payments into the cash you need for a new car, housing, or to manage debt. Recently, I helped a customer get money for fertility treatments to start a family. It's your money, and you have the right to use it now.
Get your money faster by calling Peachtree now at 866-320-8074. Call today for a free quote. You may even qualify for a cash advance. That's 866-320-8074 or visit peachtreefinancial.com.
Welcome back. As we check on the markets right now, the Dow's down to 20,962. So its decline today has taken it back below 21,000. It's down about 450 points right now, just slightly off session lows. Look at this, 2.1% declines virtually across the board for the Dow, S&P, and NASDAQ. The Russell 2000s, which has been struggling tremendously of late, down another 4% today. And the oil market is closing up for the day. Crude climbing higher again after its best day ever yesterday. Today, it's up around 12%. This after Vladimir Putin said Russia is worried about the energy situation and wants joint action on the oil markets. There's the price of crude right now at just about $28 a barrel for WTI and $34 for Brent. Brian Sullivan is here with more. And Brian, there has been so much news on the energy front, even in just the last couple of hours. I don't know if you caught our interview with the Ryan Sitton of the Texas Railroad Commission, who said they would be on board with cuts and are looking at quotas. I mean, there's a lot to keep up with.
Who are you telling, Kelly? I know. Believe me, we're all trying to do. I mean, is it time for an adult beverage? What time is it? 2:30. Oh, I got a show at 5. I guess not. 6:01. Yeah, there's a lot going on. And don't forget, we've got an OPEC, I guess we'll call it VOPEC, virtual OPEC, GLOPEC meeting on Monday. A webinar is supposed to happen with OPEC members, Russia, and basically anybody else who wants to come along, including possibly the United States or some companies in the United States. Listen, Vladimir Putin coming out and saying he'd be happy with $42 oil. Yeah, who wouldn't at this point? $42 oil looked terrible a couple of months ago. Suddenly now everybody's wishing for 42. I understand we are up. A lot of this, I'm not trying to dampen the fact that oil is up, but let's be perfectly clear. Everybody was short oil. I mean, like, I could go ask the mailman who just, Meg's dog just barked at. He was probably short oil. And so we got those headlines. It triggered all this buying in the futures market. I heard Ryan Sitton, great interview, basically said, we're trying to prevent oil from going to single digits. If you think that this oil wild ride is over, maybe you've already been drinking.
All right, Brian, thank you very much. It is 5 o'clock somewhere. All right, the government small business loan program has begun, and it was a bit of a rocky start with Bank of America being the only big lender to get up and running, and some of its customers are still getting shut out. Kate Rogers has been talking to business owners about how they're navigating, what they're experiencing, what they're finding. Kate?
Hi, Tyler. That's right. And as this program gets underway, small business owners are anxiously waiting to hear from their lenders. So earlier in the week, we introduced you to Jason Duff. Now, remember, he runs a company called Small Nation. They revitalize small cities and towns, and they've been focusing on Bellefontaine, Ohio for the past few years. He owns a few restaurants, and he's also a landlord of many consumer-facing businesses. Due to late changes from the SBA and Treasury, Duff had to resubmit a new application to his lenders this morning, and he's hoping that help comes soon.
The anxiety is high. I am logging into my bank account, waiting for those funds to show up. I have employees to pay. I have rent to pay. I have a food truck that's showing up in a few hours that I need to make sure that when I write that check, that I can cash it.
Now, many of the small business owners we've spoken to are really in the same boat. They prep these applications. They're waiting to hear from their lenders. As we know, not all banks are ready to get up and running with this. Duff told us no small business in his community that he knows of has received a loan as of just yet. Now, the SBA administrator says the program has already made more than 5,200 loans, more than $1.8 billion in total. That's an average of about $344,000 per loan per small business. One more reminder, too, for our independent contractors and self-employed small business owners that are watching, they have to wait one more week until April 10th until they can apply to be a part of this program, guys. Back over to you.
Absolutely, Kate. Thanks. Kate Rogers with the latest for us. Treasury Secretary Steve Mnuchin tweeting that the U.S. so far has had community banks process nearly $900 million in small business relief loans. Meanwhile, Bank of America has seen nearly 60,000 applications worth $6 billion. J.P. Morgan just went live in the past hour or so. Wells Fargo and Citi apparently are still unable to do so. Let's bring in Brock Blake. He's CEO and founder of small business loan marketplace Lendio. Brock, it's good to see you. I know you were very concerned about this program being ready for prime time. Are those concerns validated or assuaged today?
Well, no question there's been concerns, especially with the lenders across the country. The guidance, fortunately, they received updated guidance last night on a new application. It was released last night at 10:44 p.m. Eastern. So most lending institutions have been working through the night to be able to accept applications online. And we have been in contact with about 1,000 financial institutions as of this morning, and all of them are scrambling to be able to get up online and accept the high demand that is coming from their business owners.
Would you say disaster is so far averted, though, or that it's just slow rolling?
Well, the challenge is that we have millions of small business owners that have been communicated. The communication they received is hurry and apply to your financial institution because there's not enough money to go around. So the backlog and the demand from small business owners is through the roof. And every lending institution across the country is trying to process them as fast as they can. They're not even up and running to process them yet. So fortunately, we have the weekend. I think by Monday, most of the technology will be in place and that lenders will be able to process these loans at a much more efficient manner.
And explain what Lendio's role is in all of this, Brock, I'm sorry.
Yeah, so we are the largest marketplace of business loans in the United States. So we work with thousands of financial institutions on one end, including banks, credit unions, and fintech lenders. On the flip side of that, our goal is to help millions of small business owners across the country to navigate through this lending process. So they can come to us, fill out the application, and then we match them up with the right lender who is actually funding these loans.
Because I wonder, there's a lot of different types of banks participating. Some people have existing relationships, and that's great, but a lot of people might not, or they might be old, they might not have checked in, had an in-person touch in a while, and can't get through a call system. What's your advice to those people? Should they continue to try to work their local banks, maybe instead of a national branch? Or should they do the opposite and almost try to look for help from maybe an online bank that has an online interface and at least jump in the queue for that?
Well, if you approach your local bank, you should be able to get information very quickly to know if they have an appetite to participate in these loans. Many of them will just flat out say, no, we're not going to participate. Others will say, we're planning to, but we're not ready yet. We partnered with Jack Henry, which is a very large institution that has 7,000 banks, and we are helping those banks get up and running so they can accept applications as quickly as possible. And so a lot of these banks will come online. So if they're not online today, then you can come to Lendio. You can go to another large online lender and process it that way. But I think in a few days, most financial institutions will be online and will be able to participate and fund these loans.
Yep, we certainly hope. And Brock, thanks for joining us with some more information about how to do this.
Yeah, my pleasure. Thanks for having me.
Brock Blake is the CEO and founder of Lendio. And be sure to tune in tonight at 7 p.m. for a CNBC special report, The Path Forward, Your Business, with Marcus Lemonis, who will discuss the challenges facing independent businesses in particular tonight. So tweet your questions using the hashtag CNBC Path Forward. Tyler?
Well, Kelly, still ahead, builders are now being deemed essential, which of course could really determine the health of the housing market, not to mention millions and millions of jobs. We'll dive into that next. And as we head to a break, take a look at some of the tickers that have been the top ones searched today on CNBC.com. Tesla topping the list, followed by the Dow Jones, crude oil, Google, and Disney. We'll be right back.
It's Tune In Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
What I love most about being a scientist at 3M is that I'm part of a community of problem solvers. We make ideas grow from an everyday solution to one that can take on a bigger challenge. From packaging tape to tape that can bond materials to buildings and planes. One idea can unlock a breadth of solutions. At 3M, we are solving problems that improve lives.
It's the best of Sunday Night Football. A doubleheader of legendary Sunday Night Football games every night of the week.
That may be the greatest catch I've ever seen.
Football Week in America, every night this week on NBCSN.
Welcome back, everyone. Home Builders ETF is down 16% so far this week alone, on track for one of its worst weeks ever. But builders are now considered essential, and that could give both developers and the housing market and workers a boost. Diana Oleg joins us now with that story. Hi, Di.
Hi, Ty. Yeah, builders are considered essential by the federal government, but certain states, namely New York, Pennsylvania, Michigan, and Washington state, are not allowing construction to go on. Now, I spoke to a few workers on site here where they said they feel comfortable with all the protective gear, which is similar to what they wear anyway. One said he was just glad to have a job. He had bills to pay. Now, we did see a decline of 29,000 construction working jobs in the jobs report, but a slight rise in residential construction, up 2,000. A survey just out from the National Association of Home Builders showed 13% of home builders reported major problems with workers showing up. Now, the CEO of Bozzuto, which is developing this site and has over $500 million worth of product under construction now, says if skilled workers are available, he's hiring.
Keeping construction going is essential to our economy in so many ways. Shelter is as critical as food and water. So we need to continue building so that there's not a shortage of housing downstream, particularly affordable housing.
Now, some of the nation's largest home builders like Lennar, Pulte, and Taylor Morrison say they are still putting up homes despite a huge drop in buyer traffic. Kelly?
Yeah, Diana, thank you so much, Diana Olick. With more people working from home and businesses closing down due to the coronavirus, commercial real estate companies across all industries are struggling to collect rent. Here to talk about the impact that's having is Spencer Levy. He's head of research with CBRE. Spencer, it's a really difficult time. Are people able to see through to the other side of this? And are they able to offer forgiveness in some cases? Do they get forgiveness themselves? How's it all working out?
Well, they are able to see through, as we all hope this will be relatively short-term in nature, but it's fair to say the next 45, 60, 90 days are going to be very challenging for the commercial real estate industry. And that challenge comes in the form of people unable to or not paying rent, and also landlords who are unable to pay their mortgages as a result. The bottom line is that during this period of shutdown, different elements of the commercial real estate industry have been hit differently. Probably the hardest hit are hotels and retail, less so the other asset classes, but no asset class is immune.
You know, Tom Barrack was pretty concerned about the condition. He said it could even go back and affect the banks, who are obviously big lenders to this space. Do you share those concerns?
Well, I think Mr. Barrett gave what I would characterize as a worst case scenario, but he certainly backs it up by a tremendous amount of evidence. But I would suggest to you that the Fed, the Treasury have come in strong to protect our industry, but we certainly need a lot more. And the best area of protection they came in was in the form of protection for Fannie and Freddie Mac, who lend to the apartment build business, where they allow people now to forbear, not pay their mortgage loans in exchange for not evicting tenants. We would love to see a similar type of government protection in both bank, insurance company, and then the most difficult area of all, conduit lending or CMBS lending, where it doesn't appear that there's any government support at the moment.
Yeah, do you think that support would be coming? Because obviously the first phase of this was aimed at, people themselves who were laid off and can't afford those payments. But on the business side of this, the same effect is happening. So when you say that further support is needed, what specifically might that look like?
Well, what we would like to see first and foremost, those small businesses that are affected, that are either can't operate or going out of business, we want to see their workers protected. Well, we then move up the chain. We want their businesses protected so that they can pay rent, so that the landlords could then pay their mortgages. But a lot of this is going to take time, and maybe too much time when you are a landlord that owes a mortgage payment. So we would like to see more direct cash infusions or formal forbearance programs similar to what we've seen for Fannie Mae and Freddie Mac in the multi-housing space, to spread into banking, to spread into insurance companies, and then to spread into the conduits. More direct support, more direct guidance on forbearance, which would permit more leniency on rent relief.
One final thing, Spencer, we learned during the financial crisis that when you lose your house, it goes back to the banks. And the banks, in many cases, didn't have the capacity or the wherewithal to deal with them, and were sort of damned if they did, damned if they didn't. What happens on commercial real estate if you default? Does that kind of go back to the bank as collateral? What happens?
Well, it's the same thing. So if you are a lender, or rather a landlord, and you own a shopping center and you cannot pay your mortgage, you will ultimately be what's known as foreclosed upon, same term as in single family, and it will go back to the bank or to the special servicer for the conduit or otherwise. So the implications for commercial real estate landlords are just as serious and significant as they are in single family from the standpoint of the potential to lose their assets.
Yeah. Spencer, thanks. We'll see what else is maybe on the way. Spencer Levy is with CBRE. He's the head of research. Tyler?
Well, Kelly, the Dow is on pace to finish a week lower, now down 29% from its record highs just 6 or 8 weeks ago. We will tell you how to know when it is safe to get back into the market after this.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search Sports Documentaries on TuneIn.
Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
Is your credit card debt stressing you out? Take control. A personal loan could help you get out of debt faster and save money. Credible helps you find actual pre-qualified rates from multiple lenders in just 3 minutes.
Visit Credible.com to see how much you could save.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Stocks are paring their losses, but it has been, of course, another volatile day on Wall Street, with stocks on pace now to close their third straight week in the past four, third out of the last four. My next guest says he is not convinced we've bottomed yet, but he has an overall hopeful message in the long term. He's Michael Farr, a friend and president and CEO of Farr Miller in Washington, and he is a CNBC contributor. Michael, I suppose in a market like this, it's a question of both when you buy, but maybe even more importantly, what you buy. And I know you would counsel, whether it is fixed income or equity, to buy quality.
Every time, Tyler, you really do have to pick your places a little bit. But I think we are still seeing the evolution of this crisis. We're still expecting the peak in this disease to hit in the next couple of weeks. We're still seeing economic numbers decline, unemployment numbers increase, and stock market numbers have been very volatile. Mohammed Al-Aryan was saying on Squawk Box this morning that he thought it was premature to think that the bottom was in. He wouldn't even go as far as to say that we were in a bottoming pattern yet. So in that wait-and-see, data-dependent mode, I think you have to say, the risks out there look like the herd mentality, if you will, that groupthink that seems to be expecting a peak and a recovery and everything to work nicely. When things don't work nicely and when the group gets disappointed on Wall Street, the group sells, and you don't want to get caught buying in front of that.
Well, like Mohammed, you say you're not convinced that we're in a bottoming pattern just yet, but you also say to choose companies that can endure, not just for a couple of months, but for a couple of years. What kinds of companies or names of companies would be on your short list?
Right. I think you have to, in these times, think about what successful investors do, which is they don't panic. They are greedy when others are fearful. They buy low and they sell high. So you think like Warren Buffett a little bit. Things are going on sale. But more defensive names that are going to get through difficult periods. The Pepsi-Colas of the world, the Johnson & Johnsons, the Procter & Gamble's, where people are still going to be buying chips, where people are still, of course, going to be using Johnson & Johnson's products. Certainly Abbott Labs is another one. Microsoft, companies with great balance sheets, not too much debt, very high-quality companies that have cash flow. And stay away from those more speculative companies. The most difficult thing that I have to do, 33 years of doing this through 1987 and 9/11 and certainly the financial crisis, is to counsel individual investors not to panic, not to make those emotional decisions that always get them in the neck in the end. If you have a long-term view, if you're a long-term investor, you can stay with that quality, you can endure, and you stay away from those emotional decisions, and then you have some dry powder so that when things do go down, like Warren Buffett, you can be opportunistic and you can take advantage of some of these fabulous world-class companies when they go on sale.
Final question, and it'll need to be a quick answer. My guess is that we may be months, maybe even years away from going back to the records we saw just 6 weeks ago. What's your thought about that? When we say it might get better, it might not get that better that quickly.
This could be a long time. So part of my advice is expect something worse than your sort of bad case scenario. Expect stocks to fall another 10 or 20% from what your low is now. Expect this to last longer. That way you won't be shocked and surprised, and you'll say, all right, I can think a way of getting through that. It took 3 years for airline volumes to return, passenger volumes to return after 9/11 to pre-9/11 levels. I think the same probably is a reasonable expectation, but it probably a year from now, we're certainly trading off of these lows. We are beginning to make progress back to those old highs, and we are back in that expansionary building phase that we all so desperately desire, but probably can't rush yet.
Michael, have a great weekend. It's always good to see you, my friend.
Great weekend, Tyler. Stay safe and healthy, everyone.
You too. You know, Kelly, it has been a heck of a week. I guess oil has been the real bright spot over the past couple of sessions, up significantly again today, whether there's a production agreement or not. But it has been a wild, wild week. No tie Friday. I'm going to wear red ties on red days next week, green ties on green days.
Well, I'm getting ready.
By the way,
yeah.
Listen, I want Alexa, play "Welcome to My House" by Flo Rida.
Only if I can sing along. I'm getting ready for my supermarket trip.
And
after the show.
Siri just brought me a little something.
This is our new reality, Ty. This is life in 2020.
Everybody is welcome to my house. Everybody is welcome to my house.
Goes back.
Thank you all so much for watching. Have a good weekend wherever you are. Be safe.
Closing Bell picks up our coverage now.
I have a coffee and a water, but cheers from Sarah and I to you both for an outstanding show, an outstanding week of coverage. We still have an hour left of trade of this crazy week on Wall Street once again. And we are sitting red at the moment for the session and for the week as a whole. Down 1.7% today, down 2.25% for the week as a whole on the S&P 500. Let's have a look at what is driving the action today. More distressing data on the jobs front. U.S. payrolls falling by more than 700,000 in March, the first decline in nearly a decade. Oil continuing its rebound as President Trump sits down this hour with executives from U.S. energy companies. And relief on the way for some small businesses, slightly haphazard way, but nonetheless, some are getting it as the banks and the government begin to roll out a $350 billion loan relief package.
Consumer staples just went positive. The rest of the sectors are negative. 59 minutes left of trade. Coming up on the show, we will speak exclusively with Hollywood giant Jeffrey Katzenberg ahead of the launch of his new platform, Quibi. We'll ask him about the coronavirus impact on the entire entertainment industry. Plus, the CEO of GoDaddy joins us with a look at how small business clients are dealing with the crisis. And of course, with job losses. But we begin with breaking news in Washington. President Trump meeting this hour with executives from energy giants like Exxon and Chevron at the White House. Brian Sullivan joins us now with more about what we know, Brian, about this meeting.
Yeah, what we know, what we don't know, Sarah and Wolf, thank you very much. A couple things here, one of which is obvious, one of which is a little less obvious. So number one is these oil executives, the ones we've talked to, that I've talked to off the record, have said they're not looking for a bailout. They don't want any kind of a bailout. They're simply being requested to come to the White House, probably, everybody's suggesting, to get some kind of a deal that they're not going to destroy each other. And there are some of the names, Exxon, Chevron, Occidental, Harold Hamm, Devon Energy, and others. They're not going to destroy each other. Remember, there's an OPEC virtual meeting theoretically planned for Monday. Trump's been talking with the Saudis, so likely he's looking to round up the U.S. troops and say, what's your status? So he can go back to the Saudis and maybe the Russians and say, U.S. producers agree that maybe they're going to cut back. Again, I'm speculating, but this is on all the conversations that we've been having, and we'll see. The other thing, guys, which is a little weird, is this idea of suspending the Jones Act, which requires all shipping in America to be done by American-owned, American-crewed, and American ships. And you say, well, what the heck does that have to do with oil? Here's why you care. There's only about 100 Jones Act ships out there in the United States, and they're about 3 times more expensive to charter than foreign-owned ships. So if you suspend that, it would allow American companies to use foreign-flagged ships to, say, send U.S. oil from Houston to New Jersey. Right now, it's hard to do that or impossible, so you end up buying foreign oil, importing foreign oil, even when you've got too much U.S. oil. So if you suspend that Jones Act, theoretically, guys, I know it's a little bit Admiralty Law 101, if you suspend that, theoretically it might make it cheaper to move American oil between American ports.
Yeah, which would sound appealing at a time like this, Brian. What about the OPEC Plus meetings on Monday? President Trump, talking to Joe Kernan yesterday, suggesting that they're going to make a deal, Russia and Saudi Arabia. What are the chances of that, and what's in the market at this point?
The chances are okay, Sarah, as long as, I'm not discounting what the president said, but we talked about the numbers, 10 to 15 million by Saudi and Russia is not going to happen. But if he's talking about a coordinated deal where the United States, those 7 executives that we talked about, plus the other 9,700 or other oil producers in the United States, make some kind of coordinated effort to reduce or at least not increase output, that may soothe the Saudis and the Russians enough that the Saudis can use their power and influence over OPEC to agree to some, maybe we'll call it 6 to 7 million barrel a day cut. So we have to be very clear, and I've been talking to people inside the Saudi coalition for the last 36 hours. The Saudis aren't going to do anything unless U.S. producers are also involved, guys, to share the pain. Wilfred likes the term GLOPEC. We can call it VOPEC for virtual OPEC. It's scheduled, theoretically, for Monday, and I'll be virtually covering it for real.
GLOPEC, both, you kind of need to get the GL and the V in all at once. I'm not quite sure how we manage that, but Brian, thank you very much, as always.
Now that would sound Russian.
At least Brian got
GlobalPec.
Brian got dressed for us today.
GlobalPec.
Perfect. Brian, fully dressed. Good to see, as always, and we'll look forward to you at the top of the next show as well at 5 p.m. Eastern Time. We'll continue to keep you updated on that meeting throughout the show if there are any headlines from it. Oil, by the way, set for its best week ever, up 32%, but still down 54% year to date. Meantime, let's drill down on the other big stories we're watching this hour. Steve Leisman has more details on the dire jobs number this morning, and Mike Santoli is tracking today's market moves. Steve, kick it off for us.
Yeah, Wilf, the 9-year, 5-month expansion in the job market came to an end in the month of March, with the jobs report picking up more of the at least initial part of the downturn than many economists expected. Down 701,000 jobs, a stunning report that's only made more stunning by the idea that the numbers in the months ahead are almost certainly going to be worse, and we only captured a little bit of what's happening right now. But it does maybe show what the leading industries and what's going to happen. Let me show you some of the sectors and explain what's going on inside each one. Leisure hospitality down by 459,000. Inside that, a complete collapse of the restaurant and bar business. Haven't seen as much as we're probably going to get from the decline of the hotel business. Healthcare, social assistance. What's that? That's doctor's office, dentist's office. They closed down relatively quickly, apparently, along with child care support. That's social assistance. Professional business services, employment offices, temporary help. That all closed down. Retail, you see there, much worse is to come there, as well as construction. Let me show you the other side of the report, the household side of the survey. 1.5 million additional workers working part-time for economic reasons. 1 million additional workers on temporary layoff. 252,000 more not at work because of illness, and 250,000 decline in the self-employed. What can I tell you guys? All of this is about to get worse. We're talking about J.P. Morgan said today they see a jobless claims number next week of 7 million on top of the 10 million who have already applied for jobless claims.
Yeah, Stephen, Mike Feroli of J.P. Morgan, who came out with that number, is joining us at the top of the next hour. My question, Steve, which we've been discussing a little bit on email throughout the day anyway, is if all of these programs the government's announced were designed to try and keep people in work, to what extent are these programs just going to be desperately inefficient, firing off millions of bullets just to hope that a couple of them hit the target? The nuances of the Paycheck Protection Program, as we've discussed, does actually allow them to get a loan and have it forgiven provided they hire certain people back. But nonetheless, you're throwing so much money out, and you've already seen unemployment rates spike significantly.
You know, Wilf, I think inside your question is the answer. I covered the attempts of the prior administration to get up and running programs that would help regular people, Main Street, and it was very, very hard. Of course, the political atmosphere was very different back then, with a lot of opposition from the Republican side. This time they have everybody together to go and do it. So the issue now is, you know, it's already too late in the sense that 10 million people have already filed for jobless claims, and there's a question as to whether or not you want to bring them back. The question is down the road, can they get this thing up and running? I know that small business is desperate for the money right now. But honestly, a couple days, 2 or 3 days, it doesn't matter as much as if they can get this thing up and running in a week's time to really provide the assistance and keep people from being unemployed even further than the large numbers we already have, Wilf.
Steve Leisman, thank you. The Dow currently trading lower by about 411 points. So we've dropped about 100 points just in the last few minutes or so. Let's send it over to Mike Santoli for more on today's sell-off, Mike, and the sell-off for the week, which was smaller in magnitude, but still very painful for investors.
Yeah, Sarah, not so much as intense in velocity, more like the market is sort of slouched lower, gave back between a third, not quite half of those gains from that reflex rally the prior week. This is a 2-year chart, so you see there was that very strong 3-day rally, and then we've rolled over a bit since then. What areas are we looking at in terms of whether we're going to kind of give up on this rally is something important? Well, some people are saying like 2450 is where the downside acceleration started. So there's all these different lines you can point to and suggest that maybe that's kind of make or break, at least in the short term. But right now, it's you've given up less than half. I've had some people point this out to me. December of 2018, that low, you did also have a little bit of a rollover after the initial rally, and then you went up from there. I would characterize that as utter best case scenario because much more damage was done right here to the longer term trend. And I don't think necessarily we can just be soothed by some words from the Federal Reserve Chairman as we were back then. This is the high yield bond ETF, HYG, against the S&P 500. These are always linked assets, but just look at how tight the relationship has been this week to date. It actually goes back about a month too. What this really means is the credit outlook is very sensitive to the duration of any economic shutdown that we're in right now. And that seems to be what, whether there's a lead or a lag, it doesn't really matter which one. They're very much linked right now because credit erosion, default rates, that kind of part of the implications of what we're going through right now with this coronavirus crisis is very much an acute interest to the bond market, the corporate debt market. Although I would say lots of issuance of corporate debt this week. That's a net positive by both high grade and a few junk issuers as well.
Mike, where is the consensus right now on how long this economic pain is going to last and whether investors can see over to the other side? It feels like until we have any sort of clarity or mass testing in the United States or antibody testing, it's really hard to figure out that question of a bottom without knowing what's going to happen to this country.
Right. The consensus is confusion, is the way I would characterize it right now. I don't think anybody has a very high conviction guess about what that duration looks like. I think really the argument is, what is the market already priced in terms of a length of a shutdown? And I think it's tough to be precise about that as well. But I would suggest that we're not talking about 3/4 of essential economic shutdown. That is not yet priced in with this decline that we've seen right now. But something relatively more modest than that, maybe we're in the zone, especially if you look at the hardest hit sectors of this market, just getting obliterated: retail, energy, travel related, and all the rest.
Mike, great stuff. Thanks so much for that. We've got, 49 minutes left of the session. We are down 2%, right on 2% on the S&P 500 as we stand for the week. That means down 2.5%. We have been getting some relief for small businesses. We've been seeing that roll out today, and we will discuss how it's been processing with the Consumer Bankers Association CEO, Rich Hunt. That's coming up.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
There's only one Robert Herjavec.
Your valuation is nuts.
And only one...
Oh, that is the winner.
Shark Tank.
Always be closing.
Shark Tank. Tonight, starting at 8 Eastern. CNBC. Get yours.
This is the kind of card that has America talking. With it, people with Medicare are getting all-in-one coverage for their doctor visits, hospital care, prescription drugs, and more. This kind of insurance, called Medicare Part C, may also cover dental care, eyeglasses, hearing aids, fitness programs, vitamins, even healthy meals and rides to the doctor. With this kind of coverage, you do not need a Medicare supplement insurance plan. You will access your benefits through your Medicare Part C plan for one low and oftentimes $0 monthly plan premium. You deserve to get the most from your Medicare benefits. Call now for free information that may help you get more coverage for less money. There is no obligation to enroll. Whether for yourself or someone you love, call the number on the screen now. Call now.
Welcome back. Dow's down about 400 points. Walmart under some pressure. We've got some breaking news on that name. Courtney Reagan with the details. Courtney.
Hi, Sarah. Yes, so the headlines crossing here from the Wall Street Journal. It looks as if the Wall Street Journal was able to get some documents, and Walmart sales in stores are up 20% over the last 4 weeks, while Walmart.com orders appear to be up over 30% from the past 8 weeks. Again, this is according to a report from the Wall Street Journal. And while 30% actually sounds like a lot for Walmart.com, I went back and looked here, and some of the quarterly numbers that Walmart.com has put up here in the U.S. for net sales growth actually have been significantly above 30%. In the most recent quarter, they were up 35%, and the quarter before that, 41% and 37%. But of course, no doubt those in-store sales, if true, up 20% over the last 4 weeks. Very significant, as Walmart is a key essential retailer during this outbreak. Back over to you.
Cool. Thanks so much for that. Now, starting today, small businesses can apply for up to $350 billion in loans available through the economic relief package from Congress. Many of the big banks have delayed accepting those applications, citing late guidance from the Treasury Department. But Bank of America, as of this morning, and JP Morgan, as of this afternoon, are up and running, with Bank of America saying they've received 60,000 applications totaling $6 billion. That's as of last hour. Bank of America CEO Brian Moynihan weighed in on CNBC earlier this morning.
It's a testimony to the speed at which we can move. And so, speed is of the essence here for these types of small businesses. The PPP is meant to keep their payroll consistent, going against some of the discussion you were just having on jobs and other impacts on the economy, which we expect to see in April. And you're seeing the money will start to go out the door once these applications are processed over the next short period of time.
Joining us now is Richard Hunt, Consumer Bankers Association President and CEO. Rich, a very good afternoon to you. Thanks so much for joining us. I guess I've been speaking to lots of the banks this week, as you know, and I know it's been a monumental task to get this program up and running. Some are running, some are not. Who's to blame for the fact that we're not fully up and running as of this morning, which was the original target, whether it was too optimistic or not?
Yeah, look, here's what I do know. I know every hour is getting better. We have more and more banks online. We do expect even more money out the door sometime this afternoon. This is a Herculean effort by the banks. I will tell you, banks worked overnight, since we didn't get the regulations until about 6:30 last night. They worked overnight to put all the compliance regulations in place, and also all the compliance in place. So look, I'm very proud of what the banks have done so far. I think this gets better sometime mid next week, where we're going to process hundreds of thousands of loans. That number you just quoted from Bank of America, 60,000 loan applications since 9 a.m. Well, that's the amount of loans the SBA processed all of last year. So we're going to do about 2 million loans in 2 weeks.
I know the numbers are astonishing, Rich, and as you said, the banks didn't get the final guidance until last night, so it's very difficult to expect all of them to have been ready and up and running. But how unfair is this potentially on certain small businesses that may have needed the money today and were expecting it today, particularly when you add the extra factor that this is a first-come, first-served basis program, and it's quite plausible the $350 billion could run out, and some may be excluded from that initial 350 simply by virtue of who happens to be their banker.
Yeah, so look, we are encouraging existing customers to go to their bank. So go to the bank where you have an existing business first, because we can get them through the pipeline faster, so we can get to people who are newer customers to the bank. High volume, 2 to 3 million applications. We're working night and day to make sure all small businesses who need assistance do receive it. We don't think we're going to run out of money. The Treasury has done computations about how much payroll is needed. And if we do run out of money, I am sure Congress, when they return on April 20th or sometime in that area, will replenish the funds. It is our effort to move heaven and earth to protect the small business men and women who are the backbone of our economy.
Are there any banks, Richard, that are not participating in this program? And if so, why? Do they have legal risk here that they take on, or any kind of other financial risk that might make it unattractive for the banks?
Yeah, sure. So the vast majority of good old CBA member banks are participating if they are a SBA certified lender. First off, we're asking all 10,000 banks to participate since it is such a high volume to do it. For those who are not participating, they may have liquidity problems. Just don't know. But we're going to do everything we can from the CBA standpoint to make sure small businesses who need this money can get it. We're asking for a little bit of patience. Again, we're not even 24 hours into this process. We have more loans already in the pipeline than were made all of last year. We're going from $20 billion in distribution to $350 billion. Every small business, I think, understands when you expand your group, it's going to take some time to get through the process.
Richard, I want to end on a very big, broad question, which may be a little unfair on certain individual banks, but I think it's broadly fair on the industry as a whole to say that last time round, 0809, the banking industry was bailed out by the government, and many more banks would have gone under if not for government assistance. Is it fair to expect the banks this time round, regardless of what's happened in the 12 years in between, to go above and beyond and potentially take some losses, expensive costs, to make sure that the economy keeps going?
Yeah, look, not only should we, we're going to. This is our time to help out the consumer who've been with us for decades. We're going to do the right thing. We are reaching out to small businesses everywhere. We're not waiting for them to call us. We're calling them. We want to lead in this recovery. We understand people are both physically ill and fiscally ill as well. So this is an opportunity for the banking industry, small, regional, large, even credit unions and fintechs, to lead the way back in this economy.
Richard Hunt, thanks for joining us.
Thank you.
Kate Rogers has been speaking to small business owners all day, all week, about their experience with the loan program. She joins us now with the details. Kate, what are you hearing?
Hey, Sarah. Well, as this program gets underway, small business owners are really anxiously awaiting any updates from their lenders. We spoke with Ann Harper, who is the CEO of OMG Accessories. She's cut her staff from 20 employees now down to 5 as big stores cancel orders of her signature unicorn backpacks.
I'm hoping that these loans that we're applying for are going to give us the necessary funds to be able to bring back all of our staff and have everything functioning the way that it did before all this happened.
Many of the business owners that we've spoken to are all in the same boat. They've prepped these applications. They're eagerly and anxiously awaiting, any kind of word from their banks and lenders. This program is first come, first served. So as you can imagine, there's a lot of stress going on Main Street. I will say we've canvassed businesses all over the country. So far, I have yet to hear from one that actually successfully got a loan. I hope that changes by the end of the day because a lot of people have a lot riding on this program, guys. Back over to you.
Kate Rogers, great stuff. Thanks so much for that developing story. I'm sure we'll be back with you over the next couple of days. Now, more breaking news, this time from the Fed. Let's get back to Steve Leisman. Hey, Steve.
Yeah, well, the New York Fed out with its schedule for purchases next week, saying that it's going to reduce the amount of treasuries that it's purchasing from $75 billion down to $50 billion. And also the amount of mortgages that it will buy down from 40 or 30 billion, depending upon how you count it, down to 25 billion. This is for Monday and maybe a part of next week. I think there's two reasons what's going on here. One is there has been, as you've reported, Wilf and Sarah, some improvement in the credit markets as well. But there's also some negative things that have happened as a result of the Fed buying so much. For example, the mortgage bankers have been squeezed as a result of that. So there's some backing off by the Fed, which is a good sign, I think, for some improvement in the credit markets. Wilf?
Steve, thank you very much.
I'll take it, Steve. We saw Treasury yields tick up on that news just a bit from the lows of the session. We've got here just about 36 minutes left of trade. Take a look at stocks right now. The S&P is down 2%. The Dow is down 2%, 426 points. All the sectors right now are in the red. Consumer staples are sort of flat. Utilities and financials at the bottom of the pile. Up next, we will speak with the CEO of GoDaddy about the impact that COVID-19 is having on his company's bottom line and how his customers, which are all small business, are doing.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Getting you the story
and delivering the facts. Speaking directly to the newsmakers on the front line of this fight.
The world has changed,
but our commitment remains the same.
To keep you informed.
Stay safe.
We're all in this together.
Together. Together.
34 minutes left of trade. Small businesses across this country are feeling the impact of the coronavirus, and the jobs report today painting a pretty grim picture of the pain being felt out there by workers. Joining us now to discuss is Aman Bhutani. He's CEO of GoDaddy. Many of their web domain customers are small businesses with fewer than 5 employees. This is his first interview. Aman, welcome. Thank you for joining us. I think you have, 19 million clients, most of which are small businesses. What are you seeing out there in terms of the pain?
Sarah, thank you for having me. And yes, GoDaddy has over 19 million customers, and many of them are micro businesses. They're even smaller than small. And what we see is that the services GoDaddy offers, the domain name and the website, they're essential tools, especially in this time. With foot traffic being low, Small businesses need to be online to get the word out. And the services we offer tend to be amongst the last things that customers give up. In terms of what we see with our customers themselves, it's a difficult time for our customers. And GoDaddy being in the fortunate position that it is in terms of our offerings, we're just very, very focused on doing the most we can for our customers by putting offers out there that they can use in this difficult time.
To what extent have you seen websites and email traffic pick up significantly because of the work from home culture that's in place at the moment?
Yeah, in particular segments, we're definitely seeing websites pick up. In the non-essential segments, we're seeing a bit lower traffic to websites. But what we see is a ton of businesses expressing interest to get online. And frankly, a ton of businesses wanting to know what offering is out there for them. So we've put together a resource center for them called openwestand.org, where small and micro businesses can come and they can look at offers, not just from GoDaddy, but from our partners as well, and find the offers that work for them. And at this moment, this is critical for them.
Unfortunately, Aman, we had a pretty bleak preview with the jobs report today of which industries are getting hit the hardest, leisure and hospitality at the top of the list. What do you see in terms of which businesses will be able to weather it better than others in terms of job losses and just overall ability to survive?
Yes, I think leisure and hospitality is definitely hurt, and we see that in our business as well. In terms of businesses that can survive, what we're finding is really, really innovative sort of offerings from our customers. Customers are quickly moving to shipping products. They're quickly moving to offering services online. And we need to do that in every segment. And if we do that, we're going to see better results across the board. You know, for our purposes, we've made sure that we keep our employees safe, that we keep them purposefully working, and that we give them financial certainty. So we're not laying off anyone. And that allows our employee base to really focus on creative solutions for our customers.
Aman, I would imagine that the cost of subscription to GoDaddy for providing a website or providing a domain name, etc., is probably pretty small for a small business as a percentage of their total costs. It's also probably pretty crucial. You'd think, therefore, it's the last thing that they'd want to cut versus compared to rent, which they might not even be using their building anymore. That said, are you having to have conversations with those business owners? Are they seeking flexibility because you might be able to offer it to them in a way that rent may not be given that level of flexibility?
As in order to offer it, these assets, their domain name, your website, are really the last thing you want to give up, especially in these times. But for customers that do have hardships and need support, we are offering capabilities for them. But I would tell you, in the core of our business, we see exceptionally low churn rates historically, and we see low churn rates now. And I want to tell you a little bit about businesses that are formed in hard times. You know, the reason we think our business at GoDaddy is resilient is because we looked at the past and we know that businesses are formed and closed in good times and bad. In fact, when we look at the 2008 cohort during the financial crisis, the businesses that were formed at that time did as well as the businesses that were formed in 2007. In fact, yesterday at our Analyst Day, we shared that those businesses have spent $1.5 billion with us. So we actually feel this is a great time to come online, start a business, and those businesses will do well, as we've seen in the past. Now, we can't forecast what the recovery will be for COVID, but I think human creativity will take over, and people will form great ideas.
So how do you think about what this is all going to mean for your own bottom line and your own forecast? I know you recently held a virtual investor day. What did you tell investors who see all the headlines about small business shutting down and therefore think that that's going to severely impact your own business?
Yeah, so what we told investors yesterday is that we see minimal impact in Q1 and up to 25 to 30 million, which is relatively small impact in Q2 in terms of revenue. But we reiterated the resilient nature of our business, the fact that the products we offer, $18, $20 on average for a year for a domain name, very little for a website. The return for our customers on those products is huge. So we feel the business is resilient. And we reinforced the guide for 2022, where we said, look, we look at the past. We think this will be over at a certain point. And for 2022, we actually called it the 411 on GoDaddy, which is in 2022, $4 billion in revenue, $1.1 billion in unlevered free cash flow on an organic basis. So that sort of gives you an idea of how strongly we feel about this business over the long term.
Aman Bhutani, thank you for joining us.
Thank you for having me.
We appreciate it. From GoDaddy. 28 minutes left of the trading session. Take a look at the S&P sector heat map. The one green spot in the market right now, consumer staples, just barely positive. Utilities and financials are the hardest hit, followed by communication services and technology. And interestingly, the three outperforming sectors today, consumer staples, energy, and healthcare, those are the only three sectors that are actually positive so far this week. Energy at the top of the list, up almost 6% for the week, but obviously, Wilfred, has been brutally hit, down 50% so far for the year.
Yeah, and to all those strategists that said if you think oil is going to bounce, buy the commodity rather than betting on which companies, I mean, that played out. Oil's up 32%, the energy sector's only up 6%, as you said, Sarah. Time for a coronavirus update. Scott Wapner's got it for us. Hey, Scott.
Hi, Wilfred. Appreciate it. And good afternoon, everybody. The U.S. Supreme Court says it will not be hearing the oral arguments it had scheduled for this month. NBC News reporting the court will decide all its cases this term based only on the written briefs. Among those cases is the fight over President Trump's financial records. France's death toll has now surged above 6,500 as partial data on deaths in nursing homes get added to that total. Total cases now above 6,400. New York Governor Cuomo says he is using his authority to seize medical equipment from private hospitals and companies that aren't using them to relieve severe shortages.
I'm not going to let people die because we didn't redistribute ventilators. The National Guard are going to be deployed to pick up these ventilators, which are all across the state, and deploy them to places where we need them.
All right, that's the governor there of New York. As always, for more coronavirus coverage, please head to CNBC.com. Wilfred?
Scott, thanks so much for that. And be sure, by the way, to tune in to tonight's special report with Scott, The Path Forward. That's 7 p.m. Eastern Time. Scott will be joined by the Prophet's Marcus Lemonis, amongst others. Still to come, legendary producer Jeffrey Katzenberg's new streaming company, Quibi, set to debut on Monday. He'll join us to discuss the launch exclusively and also the coronavirus impact more broadly on Hollywood and the world of entertainment. As we head to break, here's a check-in on bonds. Treasury yields taking a leg lower today, the benchmark 10-year yielding around 0.61% as we stand. We'll be right back.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn. Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
In just 3 minutes. Visit Credible.com to see how much you could save.
For every staircase supporting a grand entrance, door frames marking milestones, floors kissed by bare feet, and walls making room for new memories. Protect the pure joy of home with Terminix. We're committed to keeping termites out of your home with our all-new On Guard termite protection system. Always backed by the Terminix promise to keep your home strong enough for all the love it holds.
23 minutes left of trade. Here is where we stand in Friday afternoon trade. Stocks are lower across the board. The S&P is down about 2%. We're at the worst levels of the session. Still Dow down 455 points. All sectors now are lower, and we are looking to end the week lower after last week's across-the-board rally. Up next, we're going to dive deeper into today's sobering jobs number. 701,000 jobs lost in this country, and how much worse the unemployment situation could get in America.
CNBC Sector Sword is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at Sector Spider.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
The finest quality, so each individual size sock fits your foot perfectly.
Thank you.
You deserve it.
What I love most about Kane 11s is that they feel amazing in any shoe.
Go to Kane11.com, get 20% off your first order.
And 100% happiness for your feet.
Only available at Kane 11.
Walk the world with me.
Yes, it's the first word of any new discovery. But when allergies attack, the excitement fades. Allegra helps you say yes with the fastest non-drowsy allergy relief and turn any half-hearted yes into an all-in yes. Allegra, live your life, not your allergies.
It's the best of Sunday Night Football. A doubleheader of legendary Sunday Night Football games every night of the week.
That may be the greatest catch I've ever seen.
Football Week in America. Every night this week on NBCSN.
Welcome back. Today's dismal jobs report only reinforces the challenge facing the country and the economy in the weeks and months ahead. Joining us now on the phone, Paul McCulley, former PIMCO chief economist. Paul, great to see you as always, or listen to you as always. What do you make of the pace with which we've seen unemployment claims spike and clearly a disappointing jobs number this morning, and what that means for whether we're going to have to see bigger or different government support programs?
I think what the job data tells us and what everything else that we can look out the window and see tells us is that we are at war. Our country has to think in terms of being on war footing. And essentially, the American people are being drafted in fighting this war, fighting this virus, by being told to stay home. So you can look at the unemployed as unemployed, or you can look at them as draftees into a war against the virus. And accordingly, I think it's going to get worse because we can't let the draftees go back to work until we win the war. And between here and there, it is the moral duty of our country effectively to pay them. There are lots of various ways to do that. But if you look at the unemployed people as draftees in a war against the coronavirus, then it's pretty logical that the Bank of Uncle Sam, which is the combination of the Treasury and the Fed, needs to send out checks and send them out with all haste. That simple.
And we're seeing them do that, Paul. Can we look to any historical precedent to figure out how long it can take to come back from this hole, or are we just in totally uncharted territory?
I think we're on uncharted territory when you're looking at historical experiences, but I think that we can apply logic here in that we have our economy in a state of suspended animation, and that will last until we win the war. But on the other side, we will want to go back to being a vibrant, going concern capitalist economy. So that's basically the game plan. And between here and there, we need to keep our capacity as an economy, which is not just machines, but organizations, intact. So we want to keep our economy from a productive standpoint intact, even if we have it idled, so that when we can go back to normal times, then we have an infrastructure broadly defined that's ready to go. The real sort of disaster, which can be avoided, and I think will be avoided, is to allow the infrastructure of our economy, broadly defined, to be destroyed during this war. We just simply need to sustain it financially and organizationally, which is why I'm such a huge fan of the small business program, because essentially it means that even if your workers can't come to work because they don't have any work to do, keep them on the payroll as draftees into this war against COVID, and Uncle Sam will pay their salary. It makes a world of sense, so as that on the other side we have a going concern economy.
Paul, to that point, though, how easy will it be to go back to a fully normal economy? And I understand that this would be a sort of nice problem to have, as it were, because it'll mean we've got through the worst of it. But how hard is it going to be for the government to remove some of these policies once people have experienced them?
I think it's going to be very difficult, actually, and it's also going to be intensely political, which otherwise is known as democracy in action. And what we've exposed here is the severe holes we have in our social safety net, and in emergency times, we can plug those holes. The technology for plugging those holes is being displayed, and I think the American people will learn that we have more capability than we thought we did from the standpoint of enhancing the social safety net. So that will be the political tug-of-war on the other side, is you want to scale back because we are a capitalist economy, but at the same time, we'd like to believe, or I would like to believe, that we will have a more enlightened, a kinder, gentler, if you will, safety net on the other side. And I think that's what we're going to get. I think that's the direction of the country is when we come out of this thing, we want not just to go back to quote-unquote normal, but a better normal from the standpoint of social justice.
Paul McCulley, thanks for joining us.
Thank you.
Up next, we bring you uninterrupted coverage of the final minutes of trade when we take you inside the market zone. Stay with us.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
You get more coverage for less money. There is no obligation to enroll. Whether for yourself or someone you love, call the number on the screen now. Call now.
Restaurants are facing a crisis, and they're counting on your takeout and delivery orders to make it through. Grubhub. Together, we can help save the restaurants we love.
You should be mad they gave this guy a promotion. You should be mad it forced camaraderie. And you should be mad at tech that makes things worse. But you're not mad. Because you have E-Trade, whose tech makes life easier by automatically adding technical patterns on charts and helping you understand what they mean. Don't get mad. Get E-Trade's simplified technical analysis.
The Market Zone is sponsored by E-Trade. Get $100 on us when you deposit $5,000.
Welcome back. Just over 10 minutes left in the trading day and the week. We're in the closing bell Market Zone, commercial-free coverage of all of the action heading into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Credit Suisse, Chief U.S. equity strategist Jonathan Golub as well.
Let's kick things off with the broader markets. Another volatile week for stocks, with the Dow, the S&P 500, and the Nasdaq all on pace to post their third week of losses in the last 4 weeks. This comes on the heels of today's jobs number, which reported U.S. payrolls falling by 701,000 in March, and the unemployment rate increasing to 4.4% from 3.5%. The report marking the first decline in payroll growth since September 2010. Jonathan Golub, the reaction, actually, stocks started off the morning strong. It looked like we were going to have an up day. And even with this down day of 2%, it's not the sort of 8 or 9 or 10% that we were seeing. How do you think the market now is going to be processing these very ugly data releases?
Well, it's really funny that the VIX, which is still at extraordinary levels, has come down quite a bit, which means that we're less likely to see these 5 to 10% kind of moves. But still, a 3% move up or down on a given day is quite disruptive. And in many cases, it's almost independent of the news flows. If you look at the last 2 weeks on the days when you had these horrific unemployment claims, the market actually traded up. So there's just a bit of a disconnect from day to day between the news and the market reaction.
Mike, with 9 minutes left in trade, we've been hopping around. We got down to 2.5% low and now back to 1.4% low. So quite a lot of market making happening, I guess, as we approach the close for the week.
There is, and there actually has been a little bit of a lazy bid late in the day the past few days. I don't know if I want to make too much of that, but the market is basically in a slower way, just acting a little bit heavy this week. And it was not surprising it was going to give back some of that very strong 3-day bounce. But here we've given back almost, more than a third of it. And I do think we're going to come to a level where perhaps either buyers have to step in and really want this, or it's, more kind of a vigil for a return to those lows. So that's going to be the debate, I think, coming out of the weekend.
And Mike,
Mike,
sorry, Sarah.
Oh, no, I just wanted to bring up, Mike, something interesting this week, which is a huge divergence in sector performance for the market. I mean, you see groups like utilities and financials for the week down 7%, 6.5%, and then energy, staples, and healthcare actually higher by a few percentage points. What does that tell you?
Well, there is some separation going on. So this is not just the wholesale get me out liquidation. I'm selling the index type activity. It's a little
Mike,
more.
Forgive me. I'm just going to interrupt. President Trump, of course, been in that meeting with the oil CEOs. Let's listen into some of the comments.
On the American energy industry as the pandemic brought on by the global economy. I mean, it's an incredible thing that's happened. Nobody thought this was possible. We had the greatest economy in the world. Probably you were doing, all of you, the best ever. Everybody was doing the best ever. And then all of a sudden they said you have to shut down the country and they have to shut down the world because the whole world shut down, not the country. The whole world shut down. 151 countries, probably it's higher than that now. That was as of a week ago. So the entire world is shut down trying to get rid of this scourge, and we'll do it. I thought what I might do is go around the room and you just introduce yourselves to the media real quickly, and then we'll have a discussion afterwards. You know, our $2.2 trillion relief package includes provisions to allow businesses to deduct their losses this year against taxes they paid in previous years, which gets you a lot of liquidity. And a lot of companies need the liquidity right now. And hopefully we're going to be back in business very soon. We're going to be open very soon. This country wasn't built to be closed. And essentially we have a closed country. Nobody's ever heard of a thing like this, but this was, I was with some of the leading professionals, and they say, not since 1917 has there been anything like this. 1917 was a time when I guess you could say 50, 75, or 100 million, you hear different estimates, people died. Think of that, 100 million, maybe 100 million people died. So they had no communications. They weren't able to shut things down like we are doing. But that was a plague. That was a plague. Started here, actually, went to Europe. We were badly affected, but Europe was really affected. So that was the worst. And so not since 100 years ago, more than 100 years ago, has a thing like this happened. I just want to start by saying it's an honor to be with you. I know most of you one way or the other. Some of you I know, but I know all of you by seeing you on the covers of all the business magazines and the magazines. And you've done a great job, and we'll work this out, and we'll get our energy business back. I'm with you 1,000%. It's a great business. It's a very vital business. And honestly, you've been very fair. You've kept energy prices reasonable for a long period of time. We've got a long period of time with very reasonable energy prices. So I want to thank you all for being here, and maybe we'll start with Mike, please.
All right. Mike Worth with Chevron Corporation. Mr. President, proud of the work our people are doing to support healthcare providers, first responders, and all the other vital industries that keep our economy going. Thank you for having us.
Thank you, Mike, very much. Appreciate it.
Vicki Hollop, Occidental Petroleum. Thank you for allowing us to be here today, and thank you for all you're doing for us.
Thank you very much. Thank you, Vicki.
Dave Hager with Devon Energy, or an independent oil and gas company out of Oklahoma City, and thank you so much for the leadership that you're providing during this challenging time. You're the right man at the right time to balance all the priorities, and we're going to be back. Thank you very much.
We'll get it done, Dave. Thank you very much.
Mr. President, Greg Garland, Phillips 66. Again, thank you for great leadership through this pandemic crisis and all that you've done on the stimulus package, really for the American economy. We're proud of our employees that are working to provide energy and improve lives.
We think it's going to come back quickly. It's ready. We're ready, and we've got the right packages out there. So
we need it.
Very good. We're looking at I think we're going to be really looking very seriously at a infrastructure package where it's so important for our country. You know, as of this moment, Darren, we have $7 trillion plus in the Middle East. For what? For what reason? And we don't put money in our own country. So we're going to do a big package on infrastructure fairly soon, I think, and it's very important. And it's great for you, great for everybody. Darren, please.
Thank you, Mr. President. Darren Woods, ExxonMobil Corporation. I'd like to add my thanks for your leadership in this space as well, and say I think all of our companies here are aligned with your objective, which is to get the economy moving and to make people's lives around the world better.
Great job you've done. Thank you.
Harold Hamm, Chairman of Continental Resources, also out of Oklahoma City. Thanks for having this meeting.
I think this is so timely and necessary. Really appreciate your leadership. Also the friendship that you've kept with the Saudis, the Saudi Crown Minister, or Crown Prince, and also Vladimir Putin. I know those hadn't been easy sometimes, but at this time it was particularly needed. So I represent our company as well as the DEPA, Domestic Energy Producers Alliance, and we're about 10,000 companies and individuals, mostly independent producers.
That's great. Great job you're doing. I think President Putin and the Crown Prince want something to happen badly. It's certainly terrible for them what's happening, too. So they want to see something happen. I've spoken to both of them. And we'll tell you about that in a little while. Thank you very much.
Thank you, Mr. President. Jeff Hildebrand, founder and chairman, Oakcorp Energy. Our distinction is we are the only private company here. This is a company that's based in Houston, domestic-only exploration and production company. And I'm really here today to represent the independent energy companies, the family-owned businesses that are in this industry, and to give you really that perspective and add to the conversation in that regard. So thank you for your leadership. Appreciate it.
Great job. Thank
you. Bet.
Thank you, Mr. President. Councilman Warren, Energy Transfer. We're the only pipeline company, and so we try to do business with everybody in this room, and I think we successfully do, actually. So it's an honor to be here. Sir.
President Trump hosting a number of executives from the oil industry at the White House today to talk about that industry's big problem with the sharply lower price of oil, of course, and the shutting down of the economy as a result of the virus. We'll monitor for you, see if any headlines come out as they relate to the price of oil and the president's energy policy. In the meantime, though, Mike, you've been looking into the market internals, and energy actually has been a big part of the story this week.
They have, yeah, and definitely to the upside. So that's one of the reasons that the up versus down volume, for example, on the exchange today is more mixed than just profoundly negative. So you see, it's it's about 3-2 on the negative side. Take a look though at S&P 500 against the small cap Russell 2000 on a week-to-date basis. Really just persistent selling in the Russell 2000, and that's something. It's almost back to its lows for this run, guys.
Mike, thanks so much for that. We've got 24 seconds left of the session for today and for the week, and we are down 1.5% as we stand on the S&P 500. For the Dow, down 1.8%, 384 points lower. The low of the session was down about 538 points, so 2.5% or so. So we're well off the lows as we approach the close. The S&P down 2% for the week, 1.6% today. Some real differentiation over the course of the week as a whole, with utilities and financials down 7% for the week versus energy and consumer staples up 3 or 4% each. But at the close today, we are down 1.5% on the S&P 500, down 2.1% for the week as a whole. Sarah.
And welcome back, everyone, to Closing Bell. I'm Sarah Eisen here with Wilfred Frost. If you are just joining us, we're here with Mike Santoli, as always, senior markets commentator. Take a look at how we finished up the day for trading. Down for the Dow 1.67%, so really off the lows of the session. That was a loss of 358 points on the day. The S&P 500 losing 1.5%, down 38 points. As you can see, we actually started the morning a little bit higher. Looked like we were going to get an up day, and then it sort of fell apart throughout the session. We closed off the highs, as I said. NASDAQ down 1.5%. The small caps, the Russell 2000, also lower on the day. It's been underperforming, and it did as well today, down 3%. Banks are a big part of that index, and banks were some of the hardest hit parts of the market today overall. And as on the week as a whole, some of the safe spots also, the utilities, the real estate, some of those places where people go when bond yields are lower, as we've been seeing, they got hit pretty hard. We're going to talk about all of that. Coming up this hour, famed Hollywood producer Jeffrey Katzenberg is with us to discuss his new streaming service, Quibi, how he plans to compete in this very competitive industry as that service prepares to go live, Wilfred.
Joining us to talk about the market day, Credit Suisse Chief U.S. Equity Strategist Jonathan Golub and J.P. Morgan Chief U.S. Economist Mike Ferroli joins us as well. Looking forward to discussing his latest estimates on the economy. Mike Santoli, to you first of all. You mentioned earlier how we'd seen a bit of buying into the close on certain days, but again, on other weeks, we've seen selling into the close on a Friday afternoon. So I guess you can frame this week and this close today as quite encouraging, only down 2% for the week as a whole.
You can definitely take it that way. I would say for the week, down 2% for the S&P 500. We're down about 5% from the highs of the prior Thursday, which was after that really strong bounce. And you can look at it and say, wow, the market really did absorb a lot of pretty awful news. Yes, certainly some of it expected, but it did not fall apart. That being said, it also didn't really prove much of anything that investors collectively see great value right here, just because the outlook is still so opaque. So I think you have to reserve judgment as to whether that low from last week is going to be truly important and a decisive one for this run, but not a terrible showing, I would say, for a down 2% week in the S&P.
So, Jonathan Golub, if you add it all up, we're down what? 27% or so from the high. Dow down 29% from the record high. Tally the damage for us. Just what kind of bad news is factored in there in terms of the economy and jobs and this virus, which is picking up steam in many parts of the country?
Well, if you look at the last 2 weeks or so, it's really been a battle between a deteriorating situation and unbelievable stimulus on the part of both the Fed and the U.S. government. And I would say that this round goes to the U.S. government. If not for their actions, this would be substantially worse. If we look at what first quarter earnings are tracking to be, it's something probably down 15 to 20% in the first quarter based on the way the analyst estimates are being adjusted. And the first quarter is going to be nowhere near as bad as the second, given that January and February weren't really affected. So that's going to be the story over the next couple of weeks. And I think the market is going to have a harder time because the good news from the U.S. or from the government and the Fed is probably more behind us than ahead of us.
Mike Feroli, lots of employment-related data over the last couple of days. Sum up for us your latest expectations of the realistic level of unemployment in this country and where it's heading for the next couple of months.
Yeah, well, the news over the last 2 days has definitely been much worse than was anticipated. And so we are in the process of rethinking just how high the unemployment rate can get. But certainly double digits now seems to be a more reasonable expectation for the unemployment rate, and we may get there as soon as the April report, which will be reported about a month from now. So we had been, expecting a little bit of weakness in the first half of March. This morning we obviously saw a lot more weakness in the first half of March, and that was, as you've noted many times on this program today, that surveyed a period that predated this big jump in jobless claims. So I think, for that April report, we could see a double-digit unemployment rate and job losses in excess of 10 million for 1 month. So certainly the news is coming in, fast and bad. And so I think we're all in the process right now of marking down our expectations of what the economy is going to do here in the second quarter.
I mean, we have to process that. More than 10 million job losses in the month of April. The unemployment rate double digits. Mike, how do you think about how that reverses? Can those jobs come back when we get to the other side of this?
So remember, the last 2 weeks, as most viewers may know, we saw 10 million initial jobless claims. That's for 2 weeks out of 4 or 5 for the month. And not all, a claim doesn't map one for one into a job loss, but it might be pretty close this time. And again, we have a couple more weeks of this. How do we recover? Well, I think the first part is obviously public health measures have to succeed, and then the stimulus obviously will help, and hopefully enough businesses have liquidity buffers to survive through this, and hopefully the stimulus can provide some assistance in that regard. But we're minded to think here that the government may need to do even more before all is said and done, just given the magnitude of the loss of income that we're experiencing in April and probably into May.
Mike Santoli, I mean, even if we're all discussing terrifying forecasts like that already, can the market really bottom until we actually see that reported, whether that's a couple of weeks from now or a month from now, to get the firm next unemployment rate?
It's unclear, Wolf. I mean, obviously, when you go down, 30-something% from an all-time high, obviously the market was in its way bracing for something like this. But until you really do have, I think, the metrics, enough economic data to where you're able to track the trajectory of the economic pain and when we might see things improve, it's just almost a guess to say whether the market has figured that out yet. And I think there's wear and tear on psychology as we go through and kind of absorb all this new information. So I think we honestly just have to see how the market does and what happens on the credit side of things I keep coming back to, because the longer it goes, the more companies fall by the wayside in terms of insolvency and things like that. So that's where things break along the way as we wait for things to bottom out and get better.
Now, it's been, of course, another wild week on Wall Street. Let's check in with Bob Pisani for all of the biggest movers over the course of today and the week. Bob.
And a wide disparity between the winners and losers. If you take a look at the sector laggards this week, it's all those sectors that would be impacted by people who couldn't pay their mortgages or might not be able to pay utilities, for example. So banks, retail, utilities were weak. REITs down 6%. That was a major issue throughout the week. And, of course, retailers, I mentioned, problem there. Of course, nobody's in the stores at all right now. If you take a look at the Dow laggards this week, Boeing's moving towards the lows that it had a couple weeks ago. Not quite there. The new Raytheon trading today down 12% for the week. JP Morgan is lucky. Some of the regional banks were down 20% for the week. Home Depot down 6%. Gainers for the week. Energy is a standout there. Nobody particularly believes that's going to last, but the rest of the group is really defensive at healthcare and consumer staples. The Dow gainers are a very odd group. Obviously, Chevron and Exxon would be up there, but Walmart, Caterpillar was an outstanding stock, and Johnson & Johnson up 8%. Guys, I would say we did rally into the close 4 of the last 5 trading days. That's one little bit of good news and lower volatility. Guys, have a good weekend.
And you too, Bob Pisani, thank you. Meantime, energy executives have been meeting with President Trump. Eamon Javers is following it for us. Eamon, what is the update?
Yes, Sarah, that meeting is going on right now, and we've been talking about some of the potential talking points. The president just hit on one of those, which is this idea of filling up the Strategic Petroleum Reserve. The president saying, hey, look, oil prices are as cheap as they're going to be, and they've been in decades. Now is the time to really fill up that reserve. He said we should fill every nook and cranny with oil that we can right now. The president also hearing from Senator Kramer from North Dakota here, an interesting one, because Kramer was saying that the United States spends billions of dollars a year in defense and security for Middle Eastern countries. He didn't name it, but clearly implying Saudi Arabia, saying, why should we continue to spend all that money on defense for these countries if they're going to treat us that way? So there's some real frustration here that you're hearing from some of the members of Congress who are meeting with the president about the U.S.-Saudi relationship and what the Saudis have done in terms of oil prices around the world. That's really impacting some people in North Dakota, which is Senator Kramer's home state. So a lot of tension there in the room. The big thing is going to be whether they can come up with any kind of domestic production cuts, any mechanism to do that without violating any antitrust rules. Sarah, back over to you.
All right, Eamon, thank you. Jonathan Golub, energy, is that a reliable source of strength for the market going forward now that President Trump has been meeting with his executives and has been getting involved in this standoff between Saudi Arabia and Russia?
Well, first of all, the fact that oil prices are up 40% from 20 to 28 over the last couple of days is a very positive thing. Well, we think about it as higher gas prices maybe. The U.S. is an oil exporter, and there are other industries that actually benefit, and it keeps people employed in important areas of the economy. But, you know, everything's cyclical, whether it's energy, materials, industrials. If we have a weaker economy, they're going to come under pressure independent of what happens between Saudi Arabia and Russia.
Mike Feroli, how important is the small business lending program that began today? And if we see that really take off in terms of successful loan issuance to lots of small businesses across the country over the next week, could that stem the big spike we've seen in unemployment data?
It could. I think the idea behind it is well structured in terms of basically giving companies money so long as they keep their payroll close to pre-virus levels. I think the big question, and we'll find out, it's just really hard to know right now, but I think the question we will find out about is whether that will actually be effective in terms of the structure. It's obviously very complicated when you have 5 almost 5.5 million small businesses, many of whom don't have banking relationships or banking relationships through the Small Business Administration. So I think if for those companies that actually access this money, I think it should help. The question is whether it will reach enough companies and it can be done quick enough in time to save those jobs.
We will leave there, guys. Jonathan and Michael.
That was a live question.
Thanks for joining us. Still to come, Congressman Ro Khanna, who represents Silicon Valley, discusses one group of small businesses that may be running into roadblocks as they try to get their hands on loans. And later we'll be joined by legendary film producer Jeffrey Katzenberg to discuss how the Hollywood coronavirus shutdown could impact his new streaming service, Quibi. We're back in 90.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Welcome back. Our next guest says his bank has completed and funded its first loan via the SBA CARES Act. Frank Sorrentino is the chairman and CEO of Connect One Bank, and he joins us now by phone. A very good afternoon to you, Frank. And just to mention to our viewers, of course, you're about a $500 million market cap bank, $7 billion in assets. So talk us through it. How many applications have you had for this PPP loan program? And are we right in saying that you've already got one loan out the door and money into the bank of your customer?
Hi, and great being with you guys again today. Yes, that's absolutely true. We've gotten over 2,000 applications through 3 o'clock today. We were one of the first banks that, right after the president signed the bill, reached out to our clients and started the process of building an application process. And we believe we were one of the first to be able to go through the door at the SBA, get the confirmation number, and fund our first SBA loan supporting our local communities. And we're so very proud to be a part of this program.
Well, congratulations on making that work relatively smoothly, I guess, compared to some of the stories we've heard. Just talk us through those numbers, though. So 2,000 applications as of 3 p.m. today. How many small business clients do you have, and where are you expecting that number to get over the next week?
So that depends on a number of things. At Connect One, we have about 10,000 business relationships, and so we don't know how many are going to apply for this program or not. Certainly anyone who is a small business and can benefit from it, we're encouraging them to. We've had a tremendous outreach from Connect One Bank out to our clients to advise them what they should do, how they should do it. We've set up a portal to be able to take in that information. We expect the number to rise. We also have a digital platform, which we purchased last year, called BoFly, which has over 10,000 applications on it and over $2 billion worth of loan applications on that platform. So we are affecting quite a few clients, both here in the New York metro market, locally with Connect One Bank, and through our platform BoFly on a national basis.
Frank, very quickly, final question. Do you think this program's going to work? Do you think it's going to prevent more layoffs and companies going out of business?
Oh, I think this program is incredibly elegant. I think it's exactly the right thing we needed at exactly the right time. I think for small businesses to know that they can stay in business for the next couple of months, that they can pay their employees, that they can give benefit to the folks that have helped them build their businesses to be able to pay their rent, their mortgages, their light bills, all their other expenses, and then to have those folks get their pay, know they're going to get paid while we're going through this crisis, and be able to pay their rent and their expenses. This is a really elegant way to keep the economy afloat and hope for better days in the not too distant future.
Frank Sorrentino, thanks for joining us, and keep those